do is you take that check and you can put it towards any credit cards you have, any loans you have, and you do not have to pay it back. But if you do take the money and use it for other things, like if you go out and freaking take a vacation or buy a car with it, then yes, you're gonna have to pay that money back. But this is intended to help the economy.
How do you always look so slim and energized? They ask. This discovery is the fastest metabolism booster on the planet, a surprising ice trick that certain researchers believe could significantly boost weight loss results. It all started
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene here with Red and Green. The Dow is a negative 500. One of the stocks, a hospital stock, off a cliff. What's it mean? Let's take a look at some stocks on the move today. We're joined by Lisa, Stockmovers Mateo.
You got it. And we're going to start with them. We're going to start with United Health because their shares have really been down as much as 20% before the bell. So here's the basic rundown. It cut its earnings outlook for the year, reported first quarter earnings below estimates, but it pointed to this surprise jump in medical costs that they say were far above what it expected. I mean, they're the largest seller of Medicare Advantage health plans, right? They also cited unanticipated changes in its Optum healthcare delivery business, and that's affecting reimbursements. But the analysts are basically what they're saying is that it's rare for the company to cut its guidance because it typically forecasts a little bit more conservatively, and it's often raises the outlook as the year progresses. So that's kind of the difference there. But it's affecting other ones. We see Humana, their shares were lower. CVS Health, companies like that, their shares were also lower this morning. So it's starting to affect other companies like this trickle-down effect. And then shares of Hertz, they have been up as much as about 20%, but yesterday, 56% up that much at the close yesterday. That was its biggest gain ever, and that's when the news came out. CNBC said that Bill Ackman's Pershing Square Capital had taken a nearly 20% stake in the company. So if you're looking for the specifics, in the filing it said it bought 12.7 million shares that were valued about $46.5 million. CNBC later reported that position was about 19.8 because it included shares and swaps. But what it does is it makes Pershing Square the company's second largest shareholder. But we all know how Hertz has been changing. Remember when they bought all those Teslas, right? They had the problem with that. So it's really been going down. The stock has fallen.
It's a mess.
You are? Okay.
I walk right up to, I didn't go to the counter. I just go right to the car.
We rented a Hertz car a number of years ago up in Maine, land of black flies. And the overage on top of the bill were insulting. They built the ticket up like I've never seen.
Yeah, I don't know. I like it. Yeah, I'm a fan. So they do very, very well.
Did you rent the Tesla?
No, that's a Hummer.
You didn't do that. No.
You get the Hummer, right?
Yeah.
Okay, next.
Okay, Eli Lilly, their shares have been down as much as 12% and it has to do with the battle for weight loss drugs, right? We've been talking about it. Lilly getting some good news because they've been working on this experimental GLP-1 pill. Everyone has the shots. Yes, but everyone's like, oh, the shots, I don't know, but the pill is what everyone's talking about. So the new data show that it worked just as well as Novo Nordisk Ozempic shot, which is interesting. It showed patients lost about 16 pounds, 7.9% of their body weight. And what's even more is that they haven't even lost, like reached that plateau, so it could show they have more to lose on top of it. But the biggest difference was the blood sugar levels, because that's what a lot of people go on it do it for. The pill lowered the blood sugar levels by an average of 1.3%.
I've been administering this shot for a long time now to a certain somebody, and easy peasy. But the side effects are pretty noticeable. Like the whole nausea thing is
yes, I have someone I know was doing the shot, and the nausea and the bathroom runs are a little tough.
Come on, just a family entertainment.
Sorry, I'm just putting it out there. One more. TSMC rose as much as 5%. The reason why it just forecast sales second quarter beat estimates. It also kept its growth outlook for 2025. Expectations AI, they say revenue double. So good forecast for AI.
Thank you. The Stock Movers this morning. You can listen to our new Stock Movers podcast. It's a 5-minute episode. You can subscribe for the biggest winners and the losers in the stock market and immediate success for our equity team. Look for that out on YouTube podcast, Apple, Spotify as well. The ECB cuts interest rates. Lagarde is speaking. The key headline: downside risks to economic growth have increased. More tariff talk as well. Finally, decent weather this April in New York. They are forever young. Simon and Garfunkel.
February to 2.2%, while debt securities issuance by firms grew at an unchanged rate of 3.2%. At the same time, credit standards for business loans tightened slightly again in the first quarter of 2025, as reported in our latest bank lending survey for the euro area. As in the previous quarter, this was mainly because banks are becoming more concerned about the economic risks faced by their customers. Demand for loans firm decreased slightly in the first quarter, after a modest recovery in previous quarters. The average rate on new mortgages at 3.3% in February increased on the back of earlier rise.
Hello, this is Dr. Paul Cottrell. We are doing a live stream on Rumble, YouTube, my website, the-studio-reykjavik.com, and doing a simulcast on X Spaces. So if you'd like to watch the market telemetry, take a look at the live stream on YouTube or on my website. But you can get both versions on the website, the larger screen and then the one with the telemetry. Now, the way that the dashboard is designed, everything is real time with these different assets that I put up on the screen. So you can take a look at the tickers, you can watch the price action, and then there's also a stream of news that comes through Dow Jones. So just take a look at that. It's a great way to keep abreast on what is happening in the market and what's going on with the news and as it breaks. All right. So that's the whole purpose of the show. It's supposed to be interactive. So if you have a question, type it into the chat or join X Spaces, ask for the mic, and you can ask your question or tell me your opinion about what's going on with the news that we're covering. But thank you for joining. I greatly appreciate it. Please help support my work by making sure that you subscribe. I have 7 channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. I have so many channels on YouTube because of the censorship and the strikes. I have to move the live feed because of the censorship. So please bear with me with that problem with YouTube. So please subscribe to all 7 channels. All the links are in the description of this video and all my videos. Now, share the links, ask your social media to follow me, so I can accrete a larger audience, so I can teach them how to improve their health and also how to navigate through tumultuous markets. I do all these videos for free. So please help support by purchasing the products on my store, by subscribing and asking your social media to follow me. You can also donate if you'd like to donate. You can donate on my website, the-studio-reykjavik.com. You can donate through Stripe, PayPal, or buy me a coffee on my website, or you can be a paid member to my Patreon channel. It's through the ones that donate are paid members and the ones that purchase the products, the different products that I offer on my store, that allows me to do these videos for free. I greatly appreciate all the patronage that has taken place over the years. Please help support, and better yet, get healthy by getting the products and stacking them the way I tell you to stack them. So with that, let's go back to the news.
Shares of United Health Group, they're off nearly 20%, really getting beat up. This is after it cut its profit outlook, earnings fall short, and that has shares of Humana.
Health is also off this morning. And we go to American Express. It maintained its full year guidance for revenue growth. Profit shares were up about 4%. Now they're down about 1%. So it's been fluctuating throughout the morning. Later this afternoon, we move on to Netflix. That is your Bloomberg Business Flash. Paul and Tom.
Oh, thanks for mentioning that, Paul. The Netflix story is actually a big deal. I mean, to see it as a mystery to what we're going to see from Netflix.
Yeah, exactly right.
So here's the idea, folks. There's a lot of young MBAs. They went to all the right schools. They're doing the CFA. They got a trust fund. They're 6'5", like the song this summer. And they don't understand that when they go, well, it takes us back to Smoot-Hawley, or the Tariffs takes us back to 1947. There's exactly one firm that has the heritage to go back to where we were on tariffs years ago. And that's the Economic Cycle Research Institute and all the iconic work of Jeffrey Moore and others. Lachman joins right now. You are in the driver's seat. You guys have seen tariffs before. What will tariffs do to our listeners and viewers?
They're confusing them like crazy. We all see that. The uncertainty's off the charts. I'm not 6'5", I am 6'1" if I stand up straight. Okay?
That's okay.
But you're right, that cycles work. They still work, even when all the rules change, right? So throw in Smoot-Hawley. I think a lot of people this week or whenever think about Nixon, right? Early 70s. Going on there, or even coming out of COVID, right? Just crazy stuff. When all the rules change, what do you have? And if you're in a free market-oriented economy, you've got cycles. Those cycles persist. So even it's a totally different situation, but in 2020, when the world was just weird, cycles turned up. It was a nasty recession, but it was going to end, and you were going to have a recovery. Back in the 70s, when a lot of things were happening with Nixon and currencies and gold and trade, cycles stood up. Right now, going into Liberation Day, into the beginning of April, we have a slowdown. Manufacturing is a little better off than the other parts of the economy going into the tariffs. And so far, so good. They're holding up. We still have a slowdown. Some of the most recent indicators are intensifying a little bit to the downside on growth, so slower, right? Which that comports with your feelings. On inflation, some of the recent data hanging in sticky, but not running away yet. So we have to keep watching them. We don't predict predictors.
That was an equity.
All right, let me just do a market update here for a second. So the S&P 500 futures right now are up 17 points at 5,322. VIX is trading at 31.34. The Euro USD is trading at 1.13. Oil is trading up at $62.85 a barrel. BITO, which is the long ETF for Bitcoin, is 18.35 right now. And the USD Japanese yen is trading at 142.26. For the ones I've been watching, I've been saying, pay attention to the Japanese yen relative to the USD. If it breaks 140, if it goes below 140, there's a high probability of the BOJ intervening in the market. All right. The Japanese yen appreciating, strengthening relative to the dollar, is a sign of international stress. All right. And that there is a flight to safety. All right. And there's this stress that's building up, especially in Asia and in Europe. If it breaks 140 and it's now trading in the 130s, the BOJ is probably going to intervene to try to weaken the currency. All right. Now, if that happens, currency markets are going to fluctuate. There's going to be more volatility, and most likely equity prices in the United States are going to go down. So pay attention. Last night, the Asian session was digesting the news, right, with this whole NVIDIA issue with the chips. And the Powell, Chairman Powell's speech at the Economic Club in Chicago, where the market was going down. All right. So they were digesting that information. The BOJ has been telegraphing in the news, in the international news, that they are watching the currency moves. All right. And they may intervene. Now, the trade negotiator from Japan was talking with Trump yesterday. They stated in the news feed, that the international news feed, that they did not talk about currency. All right. The day before, the BOJ stated that they were going to intervene if the yen appreciates too fast. So there's stress building. Now, last night, the Japanese yen was trading at 141. So that's not that far away from below 140. So pay attention to that currency. If it breaks 140, additional stress is going to be seen in the markets, and you're going to start hearing the BOJ, the Bank of Japan, start jawboning the markets, saying that they may be intervening to try to force the currency to go to weaken and go above the 140. The currency traders will know that, and what they're going to do is they're going to keep on buying yen and shorting the dollar. And they're going to force the issue, and there's going to be stress and what's going to happen is that Japanese yen is going to appreciate because of the ones that are buying the yen. And then the BOJ is going to intervene to try to weaken it and sell the yen in the market. And these traders know that, and they're going to reverse their trade and then sell yen. And then they're going to make a big profit. That's what's going to happen here, right? I can't tell you exactly when they're going to do that intervention with the BOJ. I suspect it's going to be probably around 130. I wouldn't be surprised if it was 137. All right. But it depends on other factors, like what's going on in Europe, what's going on in the United States, what's going on in China. But a key point is that break below 140, stress is building in the market, and the BOJ is going to intervene. But it doesn't mean that they're going to intervene immediately. They're going to try to talk the market up, to try to weaken, just by talking, weaken the Japanese yen and strengthen the dollar. The Japanese want the dollar to actually strengthen, not weaken. The problem is that if you look at a 10-year time series for DXY, the dollar index, it's been elevated above 100 for the last 4 years. That's not sustainable. It's probably going to have to mean revert back to about 97. It's trading at around 99, I believe. But, and just below 100, that's too elevated. All right. So naturally, the dollar has to weaken. But that also means that the yen has to appreciate. But they're caught in a pickle. The BOJ is caught in a pickle. All right. So pay attention. You're not hearing this from, these YouTubers that think they know how to trade the market. So please pay attention. I've done this professionally. you're going to see some major action in the currency markets soon.
Signs of confidence being under pressure. It was already showing signs of slowing when we entered this. In some regions like Japan, there's still hope for a deal, and so less economic damage could be the feed through from that. And then the third and final point is this narrative around the market questioning the role of the US and entering the dollar in the global system. Now, the third point I'm still questioning. I don't think we've seen enough post the shock to call the end of the dollar. And this is the point that will really determine directionality. Because in the near term, I'd note that we're now at a point where rate differentials point to euro dollar being closer to 108. Sentiment and positioning has shifted massively, being bearish the dollar. And our economic forecasts also point to dollar upside. So you need that flow argument to justify more dollar downside from here.
So, Skylar, for years, I've always asked folks like you, FX strategists and the like, what's a bear case for the US dollar? And I never really, I don't think I ever got a great answer. But boy, I'm looking at the dollar down, just in the last couple of months, down 7%. Is a bear case for the dollar just nobody really wants to own it?
No, it's not.
I think that's what it looks like right now. I think there's also a big component of it is this market narrative around a broad reallocation of.
Let me get this straight. This broad is maybe 29, maybe, probably younger. All right. Skylark. All right. Or Skylar, I guess is her name, from Barclays, FedEx strategist. All right. She's too young to understand these market moves. All right. That's one problem with her. But the other problem is that you got to understand that you can't just look at the last 6 months, Sweeney from Bloomberg, who used to be an investment banker that should know this. You got to look at time series like 10 years. When you're looking at currency, when you're looking at bonds, you got to look at a 10-year or 15-year time series because they're macro moves. They're not micro. And so it takes more time to actually see the actual pattern. The dollar has been elevated because of the post-COVID era, above 100. It is unsustainable. It is more at a normal level at about 97 for the DXY. So the dollar is going to weaken just by fundamentals of just looking at the normal average rate for the last 10 or 15 years. All right, take a look at a time series, 10-year time series. If anyone's saying, "Oh, the dollar is weakening because people are bailing out of America," wrong. It's like saying if you're running and you got a lot of adrenaline in your bloodstream, and then all of a sudden you stop running because the marathon's over, that somehow your body's crashing. You got to understand when the data is taken and and in what context. What's the overall short-term and long-term context? The long-term context for the DXY is that the dollar has been elevated for the last 4 years. Now, why do you think that is? Because of the COVID era, and around the world, they weren't doing so well. The United States was pretty robust. It was pretty surprising how robust the economy was. You had all that fiscal stimulus, and also you had the Federal Reserve willing to lower rates in 2024. All right. So what happened was there was a stimulus that was taking place in the economy. All right. But the bottom line is this: the dollar has been elevated for too long. So if you want to think that you're going to be betting against America, all right, by saying that people are flowing out of dollars, flowing out of treasuries, flowing out of equities, and that, go to international, wrong. You're going to lose out. You're going to lose out on this opportunity here. All right. The dollar is going to weaken, but it's a natural occurrence. It's not because of some sort of behavioral change with investors. Because you just look at the time series. We've been in an age where the dollar has been too strong because of the post-COVID era. All right. It's very clear. You look at the data, it's very clear on what happened. All right. You want to be at around 97. That's probably at the normal rate. All right. Now with the treasuries, The treasuries are back to its normal correlation with equities. So where is this dislocation in the market that they keep on talking about? For example, let's take a look at what's going on with treasuries right now. All right, what's the yields on treasuries? Okay. For the 10-year yield, the 10-year yield is trading at 4.29 right now. 4.29 for the 10-year yield. Okay, on the 11th, it was trading at 4.58. So it's been going down, not going up. That means treasuries are being bought. Second, let's go to 30-year. It's trading at 4.75. On the 11th, it was trading near 4.9. Treasury yields are going down. That means people are buying. See what I mean? The narrative is wrong. But not just that, yields have to be a little bit more elevated because, one, the Federal Reserve has been trying to get out of zero bound from Lehman. I mean, remember Lehman happened in like 2007, 2008, right? And it's taken a long time, and it took 2020 for actually them to get out of zero bound. All right, to start elevating. So we've been having this low interest, low yield on bonds since Lehman has been artificial because of the quantitative easing and the support of the Federal Reserve in the bond market for just under 20 years. I mean, just put that in context. All right, of what you got to look at these longer time series. If you're just going to focus on like the last week or 2 months or 3 months, you totally miss the context. Totally miss it. You got to look at the larger time series. The United States yields on average yield curve is going to more of a normal level of around 5%. Now it's going to fluctuate. It's going to go up a little bit. It's going to go down a little bit. If the Federal Reserve lowers rates, it's going to go down a little bit. If the Federal Reserve has to raise rates because of inflation, it's going to go up a little bit. But it's going to be around that 5. That's normal. That's normal.
Second row for this.
I might be. We'll see how it goes. We'll see how it goes. I mean, it's going to be. They need the Knicks. I think we'll win this one handily. Then in the second round against the Lakers.
I saw Bob Lanier sneaker once.
Oh, size 20.
Yes, yeah. Like, those great athletes. It was the Pistons. Like the young kids don't know this. The Pistons were rocketing.
Yeah.
Oh my goodness,
Let me do a product plug while they're talking about sports here. Please go to my store, the-studio-reykjavik.com. Get the Max 14 or the Max 35 or the Cleanse version. Now they're all at different price points and they're all at different parts per million. The 14 is 14 parts per million. Cleanse is 30 parts per million. And Max 35 is 35 parts per million. You take it the same way. Teaspoon a day, swish it in your mouth, gargle 20 or 30 seconds, swallow. It's going to help to boost up your immune system. They're at different price points and different PPMs for people's different affordability. If you're not feeling well, take a tablespoon or 2 a day and then go back to your maintenance dose once you feel better. All right? Boost up your immune system with the Max 14, the Max 35 or Cleanse. Go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. It's discount 5, all caps, discount in the number 5. If you buy $150 or more on my store, you get a free gift until supplies last. All right, let's go to Al Jazeera. They're talking about Gaza right now.
The Emir of Qatar also commented on the situation in Gaza when he met with the Russian President Vladimir Putin in Moscow. He said mediation efforts are continuing.
The tragic situation we're witnessing now in Gaza and the daily killing must stop. As you know, we reached an agreement several months ago, but unfortunately, Israel did not abide by this agreement. However, we as Qatar, as mediators, will strive to bring the viewpoints closer together in order to reach an agreement that ends the suffering of the Palestinian people, especially in the Gaza Strip, and now we're also seeing it in the West Bank.
China's a three-nation-state visit to Southeast Asia. He's been rallying support and bolstering trade relations in the face of US tariffs. President Xi is expected to meet with Prime Minister Hun Manet and other senior officials. China is Cambodia's biggest trading partner and investor. Katrina Yu has more on President Xi's regional tour from Beijing.
And even though it's scheduled a few weeks before this escalation with the United States, it's all the more relevant now that the Trump administration is trying to isolate Beijing via tariffs. And President Xi Jinping says his goal here is to strengthen what he has described as the family of Asian countries. Now, his arrival in Cambodia is the third and final leg of his trip. Earlier this week, he was in Vietnam and he was also in Malaysia. He received really his warmest welcome from the Cambodian government and the Cambodian people. Cambodia and China have long considered each other ironclad friends, and Xi Jinping gave a speech to Cambodian officials saying that he supports Cambodia in upholding strategic independence and wants to deepen a high level of mutual political trust with them. Now, Cambodia relies heavily on Beijing when it comes to infrastructure investment as well as private investment. Chinese companies have poured billions into developing plants and factories in Cambodia, and many of these ship clothing and footwear to the United States. This is a big reason why we've seen the Trump administration put such a large tariff on Cambodia, though it is currently on hold, 49%. So while Xi Jinping is in Cambodia, we also have officials there trying in the background to do a deal with the Trump administration. And Xi Jinping, for his part, wants to prevent any deal being done that would be cut at Beijing's expense. Now, while that is happening, we've had confirmation from the White House that China itself faces an increased tariff from the U.S. The Trump administration has said it will hike tariffs on Chinese goods up to 245%. Now, China says that this tit-for-tat tariff engagement has become a joke, that it will no longer pay heed to these tariff increases, but it has said that this has become a numbers game, and economically it makes no difference. It's repeated this message that China doesn't want to fight, but it is not afraid of one and won't back down from one. For its part, Beijing is unlikely to risk up to this 205% tariff by increasing its own tariff on U.S. goods, which now stands at 125%. However, it could mean that Beijing will resort to other means to retaliate against the U.S. Katrina Yu, Al Jazeera, Beijing.
Let's get more on this with Chang Vanarith. He is chairman of the Advisory Council of the National Assembly of Cambodia and Cambodia's defense minister. He joins us now live
There seems to be some sort of audio problem. Al Jazeera. All right, I'm going to go back to Bloomberg here.
The chief investment strategist at iCapital. Anastasia, let's get right to it now. Do you maintain a bull market call?
I don't. Not at this near-term outlook of time frame anyway, Tom. And the reason for that is you really have to.
No, she's totally fucking wrong. He can't even speak for 30 seconds. So I can tell you she's wrong. You know why? The support level for the S&P 500. There's two support levels. 5,150. It was tested on that bad day that we had 2 weeks ago, and it broke. But we're above that now, all right? That's a support level. Now, it is not a strong support level, but it is a support level. The next support level, which is very strong, is 4,810. Buy into the market now, because there's more than a 60% chance that we saw the bottom 2 weeks ago at 4,800 and about 20, 30. All right, for the S&P 500. I'm telling you, don't bet against the United States. Do not bet against the United States on this. Use this as an opportunity to buy. All right? She's wrong. She's totally wrong. Chief iCapital, Horseshit. She's totally wrong.
Terminal, and just, a few weeks ago, they were 12% roughly. Now it's kind of 8-9% growth in calendar year 25. Where do you think earnings growth really shakes out for this year?
Yeah, I think it definitely goes lower from here. And, the way to think about it, for about a 5% increase in the effective tariff rate, this is, by the way, according to Goldman Sachs calculations, you can expect 1 or 2 percentage points decline in earnings growth. So if you do the math for the 16% effective tariff rate, which we most likely have at the moment, that probably takes us down another 3 to 6% lower on earnings growth. So the S&P 500 estimates are down about 3.5%, as you mentioned, and I do think there's 3 to 6%.
She's missing a major fundamental issue here. The market already digested the tariff news. She's making the assumption that the market didn't digest it. It digested it 2 weeks ago. And then now what you're going to have is to say you have these companies coming in saying, well, we missed earnings expectations. So you'll have analysts on Wall Street downgrading their price target, all right, for that company. So you're going to hear some downgrades. We heard some downgrades yesterday, from BOA was, have analysts, and they, mentioned some companies that were downgraded. I believe Adobe was one of them. AMD was one, I believe. But the point is that you're hearing downgrades. All right, so with that adjustment, that's the fundamental that that is now coinciding with the actual technical that took place 2 weeks ago. When that tariff news came and the market sold down heavily, and for the S&P 500, it went down to 4,810, and bounced off its support level. That was the moment where the market digested the ramifications without doing all the calculations at the individual level. So I've already developed that floor. That's why I'm saying that 4,810 is a major support level. Now, could it break? Yeah, because there could be there could be additional news out there that will make the market think that maybe these tariffs are going to erode growth in the economy. But the chances are what's going to happen is most of those countries that are making those deals are going to reach some sort of equilibrium with the United States and reach a trade agreement with Trump. And then the big elephant in the room is going to be what the United States does with China and what what China does with the United States. Now, President Xi already telegraphed that he was done with the tariff escalation. Now, there's other levers that they're going to use. So that's all that information has already been digested in the market. So now, if you start hearing, now most of Wall Street wants the Federal Reserve to intervene. They want to lower the rates, which if they lower the rates the wrong time, it's going to be inflationary. So we got to be careful. Unemployment has to go up above 5%, and inflation has to go down below 2% before the Federal Reserve intervenes. That's my take on it, all right? Or it'll be inflationary. But the market, these analysts, they're going to be downgrading these stocks, all right, through earnings season. The stocks are going to get hammered. The market's going to go down, but a little bit. But what's going to happen is now they're jawboning in the news, the analysts, to try to push the Federal Reserve to lower rates. And then when there is a little bit of a sign that potentially that the Federal Reserve will lower rates, the stocks will radically go up because they're expecting the Federal Reserve will lower rates. Now, when the Federal Reserve says we're going to hold, then its stocks go back down. So we've already seen, the point I'm making here is that from a technical level, we already have seen the effects of tariffs on the market. Now you're going to start seeing the fundamentals come in on the balance sheets and the P&Ls of these companies saying that it's affecting their bottom line. But there's going to be a feedback with investors saying that means that there's a higher probability that the Federal Reserve is going to lower rates and therefore they're going to buy in. We already saw the bottom. That's the point I'm making. If you're not bullish on the S&P 500, you're a fucking retard. This will be the last chance for you for the last 4 years to actually buy in to the S&P 500 at a decent level, because it's going to skyrocket, especially when they pass tax cuts.
States, if this results in a new world order reaction to tariffs and non-tariff barriers do drop, then maybe we do have this onshoring investment boom. And so you have to allow for the possibility, especially given the tax policy in the U.S., which isn't so favorable.
She can't be negative.
Wait, but she said that she wasn't bullish. She's talking on both sides of her mouth.
Lagarde. I just lost it. Hold on. There it is. Have a lot of respect for Fed Chair Powell.
Yep.
To the defense of the brethren. Christine Lagarde speaking in Frankfurt at the ECB press conference with a set of headlines I've never seen.
Chairman Powell is a fucking retard. He screwed up with the inflation data. So did Janet Yellen. And that's why our inflation is sticky now, because they screwed up. They thought it was transitory and didn't react. And then when they realized it wasn't transitory, he didn't shock therapy like Volcker did back in the 80s. Because he was afraid. He's not a real leader. Leaders need to lead, take risk, not sit on the sidelines and play patty cake.
You know President Trump is comparing them.
Yeah,
He's
absolutely.
Like, okay, Lagarde can cut rates, why can't you?
Right.
I mean, here's Lagarde with the headline, folks, that says it all. A 50 basis point cut, a half a percentage point cut was mentioned to calm up a strong rally around 25 basis.
Yep.
Moderation.
Yeah. So obviously here, but they're not targeting any exchange rate per se, but they're cutting rates because they know that the world out there is uncertain. And
they want to keep on cutting rates. I've watched so much of this stuff over the years, like 20 years. In 30 seconds, I can tell you what they're going to say. They're pushing rate cuts from the Federal Reserve. They don't want to admit that the inflation you have is because the Federal Reserve cut rates too early in 2024 and didn't react with shock therapy when they realized that they screwed up with the reading of the inflation data during the Biden administration. None of them are willing to say this. That's the reason why you have higher goods in terms of price, because they're all about the addiction from the Federal Reserve. Yet they'll get on a soapbox and say that they're all for free market capitalism. If they're really for free market capitalism, then why are they always aligning themselves with the Keynesians and not with Hayek? Come on. All right. Good morning. The markets have opened up. Let's take a look at what's going on. All right. The S&P 500 is trading at 5,292 right now. All right. It's up 16 points. The VIX is trading at 31.22, so it's elevated. I would like to see that VIX at the low 20s or the high teens. All right. But it is elevated. Now, the Euro USD is trading at 1.13. Oil is trading at $62.58 a barrel. BITO is trading at 18.39. And the USD Japanese yen is trading at 142.21. Watch the Japanese yen. If it breaks 140, you got a problem. Okay. Now, let's take a look at... Let's go to CNN and their take on Powell's speech from yesterday. All right. Now, again, Powell screwed up. He screwed up multiple times. Inflation reading, thought it was transitory, made the same mistake as Janet Yellen. Maybe it was done on purpose. You ever wonder that? Didn't do shock therapy when they realized that they read the data wrong. And lowered rates in 2024 when they should have stayed steady. All three of those are the reason why you have higher inflation. The ECB cuts deposit facility rate by 25 basis points from 2.25. Estimate was 2.25. So they cut the facility rate. So ECB is easy. See, the markets are wanting the Federal Reserves, wanting the central banks to lower their rates. All right, and that's going to be hot money flowing into equities. All right, let's take an analysis of the CNN take on Chairman Powell's speech at the Economic Club of Chicago. Now, again, I am not a big fan of Powell. I think he's a retard, literally a retard.
Warnings yet when it comes to the economic impact of President Trump's tariffs. We are listening in on that. We're going to bring you some more of those key details. Fair to say, though, Wall Street understandably keeping a very close eye on this. Joining me now, business journalist and the host of Public Radio's Full Disclosure, Robin Farzad. Robin, good to have you here. So just a little bit of what we have heard so far from Chair Powell, talking about the level of tariff increases, he said, is significantly larger than what's anticipated, and the economic...
All right, we're only 30 seconds in. All right. And again, you know, I've watched a lot of news in my lifetime, you know, maybe too much. And I get like a sixth sense. I haven't seen this video at all. But the thing is that I'm only 30 seconds in, and they've already laid the foundation that tariffs are bad for the economy. Trump's bad for the economy. It's bad for consumers. See? Powell went up on stage and purposely talked the market down yesterday. He did it on purpose.
He says that includes higher inflation and slower growth. These are stark comments. They're very direct comments, especially coming from Jerome Powell.
Yeah, and it throws a monkey wrench kind of into his dual mandate.
And wouldn't it have been so nice to mention, if we had a stronger manufacturing base, maybe we wouldn't be jumping up for joy at 3% growth, but maybe we would have, be jumping up for joy at 5.5 or 6% growth. We've destroyed the economic clustering in the United States the last 35 years. But let's not talk about that.
Inflation under control and keep unemployment low. So what do you do if it's an exogenous shock? I mean, the playbook says you can go back to 1930 and look at the Smoot-Hawley tariff, and that was only 17 years after the Federal Reserve was founded. So you only have so much of a...
So here's a perfect example that earlier in this transmission I was talking about. You need to take a look at a long time series, all right, to get the context. All right. Now they want to use tariffs, and they want to take that time series going all the way back to the 1930s or 1920s. All right, where the economies, technology, the world is radically different than the 1920s. All right. But they're not willing to take a look at the longer time series when they're comparing the actual dollar, and that it's been elevated for the last 4 years and it needs to go back down to about 97 for the DXY, or how the yield curves have been suppressed for too long because of QE post-Lehman, and it didn't start elevating up until the COVID crisis. I mean, just look at the 10-year yield and the 30-year yield. And just look at a time series going all the way back to Lehman, and you'll see what I'm talking about. All right? But they're not willing to do that. For dollar price action and for treasury price action, they'll only look at the last 2 weeks. But they won't look at the larger context. But they have to go all the way back to an era to try to get an analog of dealing with tariffs. They're going all the way back to the early 1900s. God, I tell you, I can't deal with these people anymore. I just can't. I need to just put myself in a bubble and just be protected from retards.
Do you hike? Do you keep rates where they are right now? Do you give in to the White House and slash rates? It is a multi-trillion-dollar question.
Multi-trillion-dollar question. I mean, what more do you need to hear from him? What more do you think Wall Street and investors are listening for? Because those comments at the top are a lot.
I'll tell you, we're only a minute and 19 seconds. All of Wall Street wants to hear just one word to make sure that their drug dealer gives them what they need. And that drug dealer is the Federal Reserve pumping more money into the system. That's all they care about. And the moment that the Fed says, well, wait a minute, we're not going to lower rates, Wall Street has a shit fit.
Right. So if Wall Street at this point, are you rooting for bad news or good news? We're still creating a good amount of jobs, 5 years after the onset of this pandemic and this financial crisis. Remember, unemployment shot up to the teens.
Now think about that.
So
think about that. The real economy, we're creating jobs. All right. So we have low unemployment. I think too low of unemployment. All right. And we also have elevated prices above the 2% target. And Wall Street is praying that there is going to be jobs that are hemorrhaged in the economy so the Federal Reserve eases. They want people to lose their job so they can take the hot money and invest it in AMD and in NVIDIA. Wake up, guys.
Still a concern. There are still inflationary pressures across the economy. And if suddenly this gives cloud cover to a lot of companies preemptively, car makers, apparel makers, Walmart, Target, to go out and hike prices just purely in anticipation of inflation, and also the crackdown on immigration is on the margin inflationary. It's not going to free his hand to cut rates the way many people in MAGA and the White House and traders on Wall Street are romancing.
Right. And there's also, leading into these comments, the World Trade Organization now forecasting that the tariffs from President Trump and that resulting fallout are going to sharply reduce not only global, but U.S. economic growth. And they've said to expect the expectations for global trade this year have, quote, deteriorated sharply. Put that in perspective. The fact that it's deteriorated sharply, I mean, how
do you really think, after going 5 years ago, where we had a major disruption in the supply chain because of the crisis of 2020, you really think that what we're going through right now is as disruptive as what we went through in 2020 or 2021? Hell no. Hell no. Let's go back to Noam Chomsky. He wrote a book, Manufactured Consensus. And that is exactly what is happening in the news media. They're manufacturing some sort of belief system, and that is trying to fight globalists and bringing back jobs and building up the economic clustering for America is bad. That's what they're trying to manufacture. They're trying to manufacture this consensus. They don't want to bring back real manufacturing jobs. They want to manufacture this false belief in the media that going against globalization is a bad thing for consumers. That's what they're trying to do.
Do we really start to feel this?
You'll feel it. I mean, the perception and the shock just from a couple of weeks ago where he came out with that poster. But what's interesting to me is when you see this, it's not like Trump in the Oval Office is going to call in his Treasury Secretary and say, wait, did you just see what the World Trade Organization said? No, we can't possibly crash the global economy. He's happy to play with fire. As your prior correspondent was saying with the rule of law and the judicial system and the kind of the low-key constitutional crisis we have here. So that has to worry bankers, whether you're talking about the WTO, the IMF, the Federal Reserve. That
now let me get this straight. Okay, so we have food costs that go up. Most Americans are overweight. Their BMI is above 25. All right. This guy that's talking, his BMI is above 25. So maybe people should lose some weight so they don't need to eat so much. That's one point. But do you really need to upgrade your iPhone every year or every other year or every 3 years? No. You can, the point I'm making is you can fight this issue and hurt the globalists by reducing your demand. And what's going to happen is that they're going to lower their prices. Let me give you a point. Ford last night telegraphed on Dow Jones newsfeed that they were going to raise their prices on their cars. Ford Motor Company. All right. Now, you don't have to buy a car, brand new car. You don't have to buy a car. You can buy used, or you can hold off. And when they make these cars and they start to pile up on, in the parking lots and in the showrooms, they're going to lower the prices. They have to. And they know that. So they've already calculated on a spreadsheet, some bean counter over at Ford Motor Company, calculating on a spreadsheet. It's got an MBA that if we raise prices, knowing that we have to cut prices, we'll get to the original sticker price. So they're raising prices only to cut prices so it doesn't hurt their bottom line with their comps. That's what they're going for on this at Ford Motor Company. Don't play into it. Don't buy. Have them force the price to go down. See, the consumer, the manufacturer consensus is that the consumer does, you're going to be just hurt by globalization, pulling back and bringing back manufacturing jobs and having these tariffs and blah, blah, blah. You're going to hurt because you can't buy your cheap spatulas at Walmart. But really, the power is in the consumer. The power is in our wallet. If we decide to not spend, they can't do anything about it. And it will hurt them. That's their Achilles heel. But the American consumer is so focused on bread and circus. They're so focused on that they got to make sure that they got, they have their entertainment, they have their fast food, their junk food, mental junk food and physical junk food. And you don't realize the power that the real consumer has. You can fight this. But unfortunately, people don't do it. And it's the same fucking problem that we had in 2020, where people were informed on what was going on by nefarious activities of governments with their national security state, especially in biowarfare, and you had a population that wasn't willing to do anything about it. Nothing. Yeah, a lot of keyboard warriors, but you had individuals telling you in detail what the fuck happened. But the average citizen wasn't willing to get up and actually protest. And so you fell into different traps. You fell into the machine flipping vote trap. You fell into the trap of, be worried about losing your job during the crisis, instead of actually shining a light on the nefarious activities that your government did. But everyone's got an opinion now. Keyboard warriors, everyone's got an opinion, just like everyone's got an opinion that the dollar is falling, the treasury yields are going up, people are dumping treasuries, the correlations are broken down, there's dislocation in the market. No. That's all eye candy. And by the way, the dislocation mean reverted back to normal location. Don't bet against America. But the problem that we have is we have a lot of people in America that are just fucking dumb. Dumb.
Who believes these things work, believes in his methodology, going back to the 80s, that tariffs are good and we need to protect ourselves and cover our bases. And there's no evidence to prove that it actually works in real multi-trillion-dollar reality.
And who often puts pressure, right, at least through social media.
But status quo is so important. Status quo is so great. Just just throw away your manufacturing capability in the United States, throw away your economic clustering, and oh, by the way, you can't build a aircraft carrier anymore. No, because we decided to throw away our shipyards.
Federal Reserve telling the Federal Reserve, interestingly, to stop playing politics and basically do what President Trump wants. It'll be interesting to see what the reaction is to these comments once Jerome Powell finishes speaking. Robin, we have to leave it there, but great to talk to you. Thank you. Moments ago.
Meanwhile, GM is advertising on CNN.
Maybe the better question is, how much of it can you handle? In the GMC Sierra EV Denali, we are professional grade.
Let me get this straight. You're professional grade, but you're an EV, and you're out in the desert, building something, all right, where there's no charging station. Professional grade, really. I'm telling you, if it ain't a combustion engine, it ain't professional grade.
Fed Chair Jerome Powell giving his starkest warning yet on President Trump's tariffs.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent.
Wall Street clearly not a fan of this new message. Joining us now to discuss, CNN business editor at large, Richard Quest, who's actually live this hour at the New York International Auto Show. I imagine there's...
Wall Street doesn't like it because the Federal Reserve just signaled that they don't want to lower rates. And they're having a shit fit because you got Wall Street, they're a bunch of opium addicts from the Federal Reserve.
A little bit of chatter about this there, too. So Powell here said the public's going to pay for these tariffs and basically said, brace yourself, there's some pain coming our way.
Yes, and although he had said this before, just a few weeks ago, he sort of alluded to it and made some tangential reference. This time it was full throttle. Anybody who's used to Fed speak knew exactly what Powell was saying, that inflation is going to go up. The worry is that that inflation, once it arrives, will be persistent on top of that which is already in the system. And, you go 1 + 1 + 1 equals, it means that the Fed won't be able to lower interest rates. Because what the Fed chair said is that the dual mandate, full employment, price stability, are now about to go into conflict. They're going to have higher inflation, and that's going to mean higher interest rates for a longer period. How much longer, how high, what they're going to do, no one knows because it's so uncertain.
Chairman Powell, take my advice, just in case you're watching. Shock therapy the system, raise the rates, shock the system, and then lower the rates. Shock the system. That's what it needs.
But this is not the canary in the mine. This is actually the man walking in front with a red flag.
The red flag, but when it comes from Jerome Powell, right, it does hold a certain significance for him to be that direct.
US retail sales jumped 1.4% in March, the largest monthly gain in more than 2 years. But some economists believe the surge may have been fueled by consumers rushing to buy in an effort to beat the likely higher prices that will result from the tariffs. California is suing the administration over those levies. Governor Gavin Newsom argues the president doesn't have the authority to unilaterally impose them on Canada, Mexico, and China, the state's 3 largest trading partners. Let's go beyond those numbers now. CNN business and politics correspondent Vanessa Yurkovich joins us. Jerome Powell has said some of these things before, hasn't he? But there felt like more urgency to them. That was probably expected. But just explain why the numbers seem quite positive that we're getting on the economy right now with this background.
Yeah, I'll start on what Jerome Powell just said. And as you know, he has said some of this before, but I think he's taking this a step further. And he has said that He expects higher inflation, slower economic growth, and with that, he also expects that unemployment may rise. That is something called stagflation, and that is something that the Federal Reserve has a really tough time with because they can only sort of tackle one of those three things at once. They can't do it all at the same time. So markets right now, you can see, are reacting to this. You see the NASDAQ down more than 3%. You have the Dow down over here more than 600 points. And this all really started after Jerome Powell started speaking. Yes, markets were rattled because of some news with NVIDIA saying that the U.S. government had put new restrictions over the exporting of their chips. So tech stocks were already a little bit shaky. And now you have this from Jerome Powell essentially saying that tariffs are going to make it harder for the Federal Reserve to do its job. Listen to what he just said.
Our obligation.
All right, they're just repeating what he said. So I'm going to go to Bloomberg here, but let me just do a market update really quick here. The VIX index is trading at 31.22, and the equity market for the S&P 500 is trading at 5,298. The equity market is up 22 points right now.
We always want to have this crystal ball thing going. Yeah. And it's how you interpret the crystal ball.
Well, Paul, you worked on sell side for a long time as well. What's kind of your thought process over the decades that you did this?
Well, I mean,
Is this an interview?
Yes.
This is crazy.
I can flip it on both ways.
She's working her story. I mean, here, I'm like everybody else. I'm like, I don't like uncertainty. I mean, you can tell me where the GDP is going to be, then I can tell you where my top line's going to be, where my profit.
Well, what's tricky is because the GDP numbers a lot of times when we're talking portfolio managers is so backward looking. So there's other measures like GMA, Gina Martin Adams at Bloomberg Intelligence. She has a few different models she likes to look at that uses like capacity utilization and other manufacturing metrics, and she's been spot on the last few years.
Jess, thank you so much.
With econometrics, you throw enough variables into something, and you're eventually going to have a model that seems to be working. Then all of a sudden, it doesn't. See, this is the problem with econometrics, is you start with a few variables and it seems to be working okay, and then it starts to break down, and then all of a sudden you have to add in more variables and more variables and more variables. This is very prevalent when it comes to algorithmic trading, all right? And you're using these dynamic variables and updating parameters and all this stuff, all right? You gotta be wary when they say that they're modeling the market, right? And they have these. Invariably, what happens is the models break down, they have to be thrown away, and you have to rebuild them all right? So she said, oh, she's really accurate in the last few years. Well, few is like 4. Well, like I said, you start looking at these things at 10-year time series, these models don't work very well, right? Because of changing dynamics that are almost like black swans. There's these things that happen that changes the whole flow of things. And that's why econometrics, you got to be really careful. Really, really careful. What's the assumptions? And they don't tell you what the assumptions are. They just spit out an answer. That's why half the time they're wrong. Or more than half the time they're wrong. All right, please go to my store, the-studio-reykjavik.com. Get the structural nano silver soaps. These are very high quality soaps that I use every day. Get the charcoal tea tree, get the lemongrass, or you can get it in lavender and peppermint. Get a couple bars for your household. Use discount 5, you get $5 off. If you spend $150 or more on my store, you get a free gift until supplies last. Get these structural nano silver soaps, very high quality, help with your health and wellness. Please go to my store, the-studio-reykjavik.com. And let's talk about everything falls down here. Let's talk about probiotics. Probiotics are really important to take. I have 2 types. I have it in a veggie cap form or in a powdered form. I prefer to take the powdered form because it's just easier to take during lunch, but it's up to you. Now, taking a good probiotic is going to help with your gut biome. It's going to help you to absorb your nutrients. You're going to have a better communication with your gut and your liver. That's very important. Your liver is a major detox organ, and it is very important in producing different types of proteins, helping with cholesterol, it's a very important organ, all right? And your gut and your brain. So with a good communication between your gut and your brain, you're going to sleep better, you're going to be less irritable. And a good gut biome, research that's coming out of Europe is showing that a good gut biome could mitigate early onset of dementia, all right? So that basically means that with a good gut biome, you'll have better brain health. So please go to my store, the-studio-reykjavik.com, get the probiotics, make sure you filter your water, and stay away from processed foods, because processed foods damages your gut. And when you have a good gut biome, you're helping with your immune system too. So please go to my store, the-studio-reykjavik.com, get the probiotics, take them every day. It's very important as a base part of your protocol, your health protocol. All right. Let's go to Al Jazeera right now.
From members of parliament, from civilians, from the military. They do want peace, but they aren't going to stop fighting for what they describe as justice. Now, it'll be justice for things like what we've seen in these overnight attacks in Dnipro, but just a few hours ago, there was another attack on Dnipro on the eastern city of Nikopol. This time it was Russian artillery that left 2 people dead and 5 injured. The latest on that attack in Dnipro overnight describes a massive drone attack by Dnipro Electrical Networks, an energy company out there, that said its offices and production facilities were also heavily damaged in that drone attack. In a statement, they said that Russia continues to deliberately target energy facilities in an attempt to leave Ukrainians without electricity. President Volodymyr Zelensky chimed in and said that the country has managed to preserve its energy system better this year than previous winters, the worst of winter seemingly over, but he had a warning for people. In that statement, he said that this doesn't mean the threat is gone. We know that Russia is preparing for more. We have intelligence and data from our special services. Right now, both before and after Easter, new Russian strikes are possible. In issuing this warning, after several weeks of massive strikes, ballistic and drone attacks on several civilian areas.
Yulia Shapovalova is in Moscow, where the emir has been meeting with the Russian president. This is the emir's official visit to Russia. So the Kremlin, of course, emphasizes the importance that he says that it promised a serious conversation between President Vladimir Putin and the Emir of Qatar, and the parties are also planning to sign some mutual important documents. And we're just receiving some lines from there. Vladimir Putin has noted that relations between the two countries are strengthening, and according to him, Russia and Qatar have enough interesting projects. Both countries are developing them also in the gas sector, while the Emir of Qatar also emphasized how Qatar values the relations between the two countries, that he highly values the current level of relations with Russia, and mentioned the subject of investment cooperation, including in the healthcare sector. And we're also hearing from the Kremlin, and it says that Qatar can become a place for negotiations between Russia and the United States about the future of the Ukrainian settlement, apart from the humanitarian spheres and a number of key topics on the international agenda. So they are also going to discuss not just the Ukrainian conflict.
It's very interesting in how Russia seems to be trying to circumvent what Trump's trying to do with the Middle East. Please go to my store, the-studio-reykjavik.com, and get these multi-purpose deodorants. These deodorants, you use it every day as a deodorant, but it will help to detoxify your body. So by using it every day and helping slowly detoxify your body, it's a dual purpose, right? And a lot of people don't detoxify their body enough to be able to get that max health benefit. These deodorants are made from essential oils from the Himalayas, and it has no aluminum, no baking soda, made from all natural ingredients, very high quality ingredients. You can't get a better deodorant bar than this. Now, it is a little bit more expensive than your normal deodorant, but the normal deodorant you're getting is not that good for you, honestly. And this deodorant bar is much higher in quality. So you can get it in peppermint, lavender, and tea tree, or you can get it in in citrus. It's for males and females. Get a few bars for your household. Help support my work. Help support your health. It's a dual win. Use discount 5 and you get $5 off. If you purchase $150 or more on my store on any order, you get a free gift until supplies last. Please go to my store, the-studio-reykjavik.com. Make sure you get these products. Very important. And I try to provide products that are dual purpose, so you maximize your dollars you're spending. You're investing in your body. All right, we're talking about the markets and how to invest in it for your future, but you also need to invest in your health. So please go to my store, the-studio-reykjavik.com. All right.
56% yesterday at the close. The reason for all this is a report from CNBC that Bill Ackman's Pershing Square Capital Management has taken a nearly 20% stake in the company. Finally, shares of Eli Lilly, they are on the rise of 14%. This is after positive phase 3 results for an experimental weight loss pill, and that has shares of its rival Novo Nordisk lower. Its ADRs are off about 8%. So we check the markets all day long. Let's get right to it. The S&P 500 up 0.2%. We have the Dow off about 1%. The NASDAQ is little change. The 2-year yield at 3.76%. That's little change. And the 10-year yield, 4.29%. That's up 1 basis point. To commodities, gold falling after hitting a record. Right now we have COMEX gold at $3,325 an ounce. And we have oil rising for a second day. We have Brent crude at $66 a barrel. WTI crude $63 a barrel. The Bloomberg Dollar Spot Index is little change, and the euro right now down about 0.3% at 113.61. That's after the ECB lowered interest rates for the 7th time since last June. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo, and that is a Bloomberg Business Flash. Emily and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Emily Perfetto sitting in for Alex Steele and Paul streaming live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. You know, Emily's got a day job, folks. She's actually a reporter for Bloomberg News. She's fact-checking a story. I don't know what that is. I think you learned that in journalism school. I'm going to give her a few minutes so she fact.
I actually saw an incorrect fact, so thank God we didn't publish this.
You did? So very good.
This is why we fact-check all.
All right. So let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
United Health shares are sinking almost 20%. That's the most since at least March 2020. I tried to go to since GoPaul actually, and it's way more than that, but I'm not sure, so I don't want to say it out loud, but we're definitely sure it's the most since at least March 2020. So the company cut its annual forecast and reported its earnings miss. That's the first time in more than a decade. So this is a foreboding sign, and majority of the health insurers in that same sector are plunging. United Health said it was blindsided by rising medical costs as the first quarter closed. And this appended a forecast that it gave just 3 months ago. The guidance cut is rare actually for United because they typically forecast conservatively and they often raise their outlook as the year progresses. So definitely people are spooked here. We have TD Cowen saying that the quote ominous results cast out of the forecast of every insurer.
I mean, is this a UNH thing? Is this an industry thing? Because again, this is something that kind of just under promises and over delivers.
Exactly. That's why I think it's scaring a lot of other companies in the sector. And it's had a tough year. We have that killing in December of the top executives.
Right.
It's definitely a bumpy ride so far for United Health.
All right, what else we got? Eli Lilly. This is not a small little biotech stock.
Yeah.
14%. This is a monster market mega cap stock.
Definitely, and it's rising the most since August 2023. Shares surged because they showed its experimental weight loss pill worked as much as Ozempic did, and that brings the company one step closer to a needle-free alternative. I mean, a lot of people say that they're not taking those weight loss drugs because it's an injection. So if it's a pill, it's really a game changer, and that's how they're seeing it too. So the trial is one of the Lilly's running tests of the drug called orforglipron. Let's try that again, orforglipron.
I like it.
So it basically aims to heal diabetes, obesity, and other conditions like sleep apnea. And again, the fact that it's not an injection is a big thing.
You know, I apply the injection to someone on a weekly basis. It ain't no big thing.
Really?
Yeah, it's no big thing. So, but the pill would be like 1,000 times better.
I'd rather be the receiver than the injector, I think. It's scary.
All right, what do we got from Spirit Airlines?
We are actually changing it to TSMC, so ADRs are edging slightly higher, and that's after the chip maker kept its bullish outlook for growth in 2025. So this suggests that the world's biggest chip maker is confident that it can ride out this U.S.-China trade war, which is a big deal. And this is really what's spooking a lot in the market. So this is the big thing that TSMC said that. And it also kept its growth outlook for 2025 on expectations of AI revenue doubling. We have Bernstein saying, this outlook, it keeps the narrative intact, but it does not provide much cushion for a possible tariff impact.
Yeah, I don't know. I'm surprised they actually put out that number.
And that they're very optimistic.
Yeah, very good.
So maybe
All
they're
right,
seeing
Isabel Lee.
something.
Good stuff. Appreciate that. This is Isabel Lee, cross asset reporter here. All right, this morning, President Trump posted on Truth Social that, quote, Powell's termination cannot come quickly enough, end quote. However, yesterday at the Economic Club of Chicago, Fed Reserve Chairman Jay Powell stressed the importance of the Fed's independence and its, quote, broad support across both political parties. So we'll get a little sense here from Fed Chairman Jay Powell. Let's take a listen to his comments.
Our independence is a matter of law. Congress has, in our statute, we're not removable except for cause. We serve very long terms, seemingly endless terms. So we're protecting the law. So, Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties.
All right, that was Fed Chairman Jay Powell speaking at the Economic Club of Chicago yesterday. Our own Michael McKee was there, giving us some live reporting there. But certainly, President Trump's tweet this morning got some attention from a lot of folks that look at the Fed and look at the Treasury market, look at interest rates and the U.S. economy. Ira Jersey joins us, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira, I'm sure you've been talking to a lot of your institutional investor clients this morning. What did they make of the president's comments that are on social media?
Yeah, a lot of people are just, I think that there's a scapegoating going on, right? Like, President Trump might say that, I want to get rid of Jay Powell because I want to cut interest rates, but I think there's also an acknowledgement that in doing so creates certain risks to the economy. And I think from the administration standpoint, having a scapegoat on the economic outcomes is convenient, right? So if the economy does fall into a recession later this year, they can say, well, look, they can point to this tweet and say, well, the president said that he was going to be too late, and in fact he was, right? And then if the economy chugs along, you can take credit saying that all of the fiscal policies that you're doing is supporting the economy. So I think that there's a political convenience here potentially that Jay Powell remaining in office can support the administration in some way in public opinion.
So Ira, does Trump actually have the ability to remove Powell from his seat as the chairman of the Federal Reserve? And if not, how much longer is Powell there?
I'm not a constitutional lawyer, so right. Jay Powell probably knows better because he is an attorney. But there are some, I would suggest that folks maybe go look at some of Elliot Stein's work here at Bloomberg Intelligence, because he's been following this very closely as to the different court decisions that will lead to independent chairs and directors of independent agencies, whether or not the president can actually fire them, and what cause means. Like, how is cause defined? That's something that the Supreme Court is going to be taking up. And depending on how that goes will depend on whether or not President Trump does. Now, let me say from an economist standpoint, and I'm an economist by training, not an attorney. There's a vast literature on why central bank independence tends to have better inflation outcomes. Doesn't necessarily have better growth outcomes, but has better inflation outcomes. So the idea that you are going to take away the Fed's independence and have an executive branch, the executive branch, ultimately run monetary policy probably means that you're going to have monetary policy that's easier than it should be at certain times.
I'm totally against Powell's tenure at the Fed. He has screwed up multiple times, but I agree with him in principle. I agree with this chief U.S. rates strategist at Bloomberg Intelligence. IRA, I guess it is. The Federal Reserve, if they lower rates at the wrong time, which is what Trump wants, he wants to lower rates now, will be inflationary. Trump's take on lowering rates by the Federal Reserve is wrong. It's just flat out wrong. When you have unemployment too low, all right, below 5%, and you have the inflation rate above 2%, and you lower rates by the Federal Reserve, it's going to be inflationary. So Trump is 100% wrong on this. Now, what you can do is drive down yields by having a pro-growth policy where the equity market goes up because of real economic growth. And treasuries yields will go down, right? And what will happen is the stock market is going to go up because they're inversely correlated. And that would be a good thing, and you don't have the intervention of the Federal Reserve doing wrong-headed decisions. So Trump, if he does what he wants to do with the Federal Reserve, he's going to cause inflation if the data is showing that the unemployment rate is below 5% and the inflation rate is above 2%. That's a fact. And I'm not a fan of Powell at all. I think Powell's an idiot.
Yeah, in the rates are pretty steady. 10-year, about 4.29%, 4.3% on your 10-year U.S. Treasury. Gold actually a little lower. This is Bloomberg. Good morning.
Please go to my store, the-studio-reykjavik.com, and get the structural nanosilver drops and lozenges. We're going into the allergy season now. It's really important to mitigate the problem, all right? And once you mitigate that irritation in your throat, you're reducing the chances of further issues, all right? So with that said, I have 3 different flavors for the drops. You get 100 in each bag. So get a few bags of the structural nanosilver drops. You can get it in blueberry, you can get it in cherry, and also in honey and lemon. All right? And then also elderberry and zinc lozenges. You get a 21 in each bag. So get a few bags for your household and for work. The lozenges and the drops, it's really important, because once you have that irritation, you want to mitigate it right away before it festers. So please, take my advice. The moment you start having that irritation at work or at home, take them right away. Get the lozenges, get the drops, have a few bags of these in close proximity to you so you can mitigate the problem right away. Please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order. And if you spend $150 or more, you get a free gift until supplies last. All right, let's see here. All right, let's go to Cash Jordan here. Let's see here.
In New York City, there are so many undocumented immigrants. There's nowhere to put them. The yearly budget for asylum seekers, larger than the budget for the entire health department, the sanitation department, even the fire department. The total amount goes.
So New York City has spent billions over the last 2 years caring for hundreds of thousands of asylum seekers. But the city's recently been exposed for spending almost twice as much caring for newly arrived immigrants, some of whom may be here illegally, than it spends housing homeless New Yorkers who don't get to stay in luxury hotels and have shelters so bad many would rather take their chances in the subway. But worst of all, in order to continue overspending for asylum-related services, the city's had to take money and redirect it, which could have been used for things like the police department or the fire department.
This will reduce the number of firefighters coming to assist you if and when you need us.
The city put up tents and rushed to convert more than 150 hotels into shelters.
We spent over $7 billion.
Billion with a B.
Billion with a B.
We blurred this video because the man in it is holding up his middle finger. Rashid Beldagar says the middle finger was aimed at him, a resident at the Clark Thomas Men's Shelter on Ward's Island.
They're not there to help people at all.
And this wasn't the only shelter employee Rashid recorded today behaving badly.
The number of non-citizens is going down, but the cost to care for them is not. An average of $370 a day, significantly more than what it costs to house New York City's homeless.
The place is horrible. The place has not been painted. The floors is nasty. The place is absolutely horrible.
President Carl James says all of his complaints about conditions here have fallen on deaf ears.
So as progressives claim victory over the asylum crisis, a watchdog has revealed that the per-person costs of care remain unacceptably high. And what nobody's bragging about is that even though less people live in the shelters today than they did a year ago, that per-person cost, it seems to be stuck at just under $400 a day, an amount almost double the $207 New York is willing to spend per day caring for its homeless, which has led to accusations the city is neglecting those who have nowhere else to go, many of whom now live in our subways and on our streets full time because the conditions at their shelters, which are deliberately kept separate from the city's asylum shelters, are what many would consider deplorable. But critics say what's even more disturbing is that things are just as concerning in other departments the city is supposed to provide for, like the fire department, the police department, and sanitation, all of which could be in jeopardy the longer this crisis continues. Because even though the city was recently able to avoid making department-wide cuts to fire and police, critics say the writing is on the wall because New York City has run out of money. And critics say the city is unable to provide unlimited housing, food, and care for people who could be from anywhere on Earth but have the right to a hotel room in Midtown just by virtue of finding themselves within city limits, which is what our laws mandate. A mandate that hasn't just challenged the city's ability to fund all of its various departments, but has created a new asylum industrial complex made up of hotels, aid groups, and medical providers all making bank day after day off an emergency situation that is now over 2 years old. And that brings us to the real reason asylum-related costs are unacceptably high and challenge the city's ability to run itself properly. It's been allowed to happen on purpose. And by allowing this to happen, it's created sort of a gold rush where companies seemingly sprung up overnight to bid on poorly planned emergency contracts that overpaid for even the most basic of items, like frozen TV dinner-style meals for $11 a piece, which shelters threw in the garbage, unopened and uneaten, instead of making them available to New York's neglected homeless population. And these costs have gotten so out of control that even local progressive watchdogs are sounding the alarm. But as you're about to see, New York City may be past the point of no return. That whole leads inside the bus terminal. And what's absolutely ridiculous is that 2 years ago, when buses first started arriving here, nobody was asking the right kinds of questions. Like, what's going to happen if New York City's laws mandate that it house an unlimited number of people for an unlimited amount of time? That's where we are. We're a sanctuary city with a right to shelter. And those two things led to the asylum crisis, which happened when our border was opened up to the entire world. And although the city is spending less money on the asylum crisis today than it was a year ago because it's housing less asylum seekers, the per-person costs associated with caring for asylum seekers are at a level that eclipses all the other humanitarian programs the city's involved in, especially those that care for its homeless, who are kept separate from asylum seekers.
Says the number of non-citizens is going down, but the cost to care for them is not. An average of $370 a day, significantly more than what it costs to house New York City's homeless.
It does call into question why the cost per day is so high and has been stubbornly high. It has been about that $370 level since the...
So that $370 per day figure, that's what it costs on average to house every single asylum seeker in the city's care right now. But the thing is, that cost is still about where it was when this crisis started. It hasn't come down, which it probably should have. Because as bus after bus dropped individuals off right here at the Port Authority, our leaders told us we were in an emergency situation, which we would bring under control in the near future. Yet here we are 2 years later, and that hasn't happened. In fact, costs may have gone up. This article talks about how the hotels being used as shelters are making an absolute golden parachute amount of money. But it also tells us that the estimated cost to care for people were $352 per household, which is less than the numbers we're getting on the news today.
Why does it cost more to house an undocumented immigrant compared to someone who's homeless?
In large part because we had to set up a system practically overnight. There's a lot that goes into understanding the ebb and flow of people who may need shelter.
Most of the multi-million-dollar costs.
So there's your problem. Two problems, actually. The first problem is that for some reason, New York decided to build a completely separate shelter apparatus to care for people who arrived at this bus terminal seeking asylum. And the second problem is that every single time the city tries to cut costs, humanitarian immigrant advocates say that it's cruel and inhumane and that zero reductions whatsoever should be made to the services asylum seekers receive, which means the city has a completely brand new system that is totally inefficient, separate from everything else, and every single time it tries to make that system more efficient, somebody out there who's an advocate says that what's happening is wrong. And critics say the reason this was done was not only to make a handful of well-connected companies and businesses filthy rich, but it was also an opportunity for New York City's progressive movement to show everyone in America how great illegal immigration was going to be for our country. And there was political momentum to use America's open border to attract as many people to sanctuary cities in defiance of the country's immigration laws as possible. And let's be honest, this is the shelter system that existed before the asylum crisis. It's so bad you've got people deliberately living on the streets. A system like that was never going to bring over 220,000 people on buses like this to this city. No way. Critics say this is why a separate system was created. The current system is so terrible it would have discouraged those without permission to come to America's largest sanctuary city, something local activists have been against for years, which is why they defended the practice of housing newly arrived immigrants in luxury hotel rooms in Midtown as being completely humane and necessary. And there are some reasons for this. After all, folks who just arrived here from another country may have different needs, but as humane and necessary as activists claim these separate shelter arrangements are, now that the asylum crisis is over with the election of President Trump, the separate shelter system is magically disappearing and activists are all in favor of it. And the current separate shelter system is going to wind down and be merged into the existing systems New York City already has. And now activists are saying that it's inhumane to have two separate shelter systems because keeping people separate just helps ICE if they were to come here and be looking for specific individuals who might be here with a dangerous track record in an unlawful capacity, which completely negates the justification for having separate systems, one of which costs twice as much as the other in the first place. They were never needed.
Most of the multi-million-dollar contracts were issued under emergency rules, meaning they didn't have as much scrutiny or oversight as typical contracts.
I think we also need to move out of an emergency state.
The commissioner says they are, and believes when we look back at this moment in time, the ends will justify the means, just like so many.
So here's where things go from bad to worse. The ends certainly do justify the means, but only from a certain point of view. And that would not be the point of view homeless asylum seekers living in tents have from the doorway of their tent. Oh no, this system has failed them too, as you're about to see. In fact, the only folks benefiting from this are those who've started and run the businesses designed to profit from it. And that's because the city needed a way to trim the costs associated with the asylum crisis while keeping it going. And what they came up with was a system of shelter stay limits, which allowed unlimited numbers of people to still come here requesting shelter, but made space for them in the current shelter system for asylum seekers by removing the people who were currently living there, with single adults being evicted after 30 days and families being forced to relocate after 60 days. And the only way you can pull something like that off is if you tell the people moving into the shelters that all their needs are going to be taken care of and that the city is going to not only fix them up with a temporary place to stay, but is going to give them the tools they need to have a great future here in America, including help with employment, something that they never did. And the city was only able to connect 2,000 people with permanent employment. Out of the 220,000 and counting people who've come here, but even though the circumstances of this crisis have led to people being exploited, as you're about to see, the companies getting rich off this crisis have a plan to keep it that way.
If you want my 2 cents, we got options.
My 2 cents?
My 2 cents?
My 2 cents?
Here's my 2 cents. I'm planning for the future. Come on.
So this large building behind me, which spans the entire block, it's the Row. It's a former luxury hotel that went bankrupt and couldn't make it until the asylum crisis came along and bailed it out. And as you're about to see, these facilities, they aren't just gold mines for their owners, they're also gold mines for all of the little companies inside of them that together make up this asylum industrial complex the city of New York has created.
It's been dubbed by the city as a new Ellis Island. The Roosevelt Hotel was turned into a migrant arrival center in May 2023 and became the one-stop shop where newly arriving migrants could get information 24/7 about what to do and where to go next. Since its arrival center.
So our leaders spent $7 billion creating a system of hotels like this and the one down the street from here, which was just on the news, to recreate Ellis Island for some reason. And these places do a lot more than just house people. They also offer round-the-clock hot meals, and the Welcome Center also functions as sort of a clinic. You've got doctors inside, people can get medical checkups, and there are also an army of caseworkers and humanitarian aid advocates whose sole purpose is to connect people who come into these places with other services that might be available and paid for them. But even though all of these systems exist to help the less fortunate, which is good in theory, we still end up having people working in illegal labor situations and living in tents outside of the very shelters they get kicked out of. These systems are failing. Unless, of course, you're making money off of them, and they're succeeding. And probably the best example of this took place right here at the Row Hotel, where videos surfaced of the city's contractors who run this place throwing out the meals that taxpayers shelled out $11 a piece for. The meals were part of a $432 million no-bid contract, and this company was being paid to deliver 70,000 meals a month to places like this that were just getting thrown right in the garbage. Which reveals a couple of things. First of all, the meals weren't really necessary. They were a waste of money to be.
Something that's coming over the Dow Jones news feed here is that Morgan Stanley adjusts the target, the price target for the target for Match Group down by $1. It was $33, now it's $32. So we're starting to see, I get the key point here is you have these banks that are now coming in with lower price targets for companies in the United States. Morgan Stanley also adjusts Invesco price target from 16 to 15.
Because everyone who was supposed to eat them ate something else. There were no reported cases of starvation inside the Row Hotel. And if there were, you can bet we would have heard about it. But this company, DocGo, is the name of it. You'll see their medical vans parked out in front of other city shelters. They're still out there making money off this whole thing, delivering tests and scans and other potentially expensive medical treatments right to the door of some of these facilities. But the saga of this company perfectly explains how this crisis got out of control. They started to make money off government contracts about 4 years ago, and then when the government contracts being handed out changed, the company changed. They changed their whole business model to make money from a new crisis. And
another downgrade is Lennox International from $750 a share to $700.
Not even an argument over the legitimacy or the illegitimacy of the asylum crisis. It's just plain stupid how this thing has been run since day number one.
Behind me here, there are more meals than we serve around the clock, 24/7. After that, migrants are led to a room that is set up as a healthcare clinic. Every migrant is screened for any disease they might have contracted along the way, offered medical assistance, screened.
You know, it's nice that people who've never been to a doctor before finally get to see one here in America, of all places. But what cost has the city incurred to provide these services? We're seeing it all around us, especially when we take public transit and see thousands of people with nowhere else to go who are neglected and don't feel safe staying in the shelters that are provided for them. But the crazy thing is that even though the asylum industrial complex here helps nobody except the people running it, it's still in charge, it's still calling the shots, and it still decides how things get done around here. And now it's deciding to do everything it can to preserve itself for the next 4 years and beyond, closing down facilities that might be on federal land and conceivably are at greater risk from ICE activity than a city shelter on public land, which houses asylum seekers as well as homeless New Yorkers. What do you think about that? Has the city created a monster here which exists in the name of humanitarian compassion, yet helps absolutely nobody except itself? And are activists correct? Is it really humane to move people into inhumane shelters just to keep them away from Trump? Even though the president and the border czar have said time and time again, their first priority is dangerous individuals, gang members, and criminals who make us all less safe. Let me know. Thank you so much for watching. See you in the next video.
Okay, real-time trading right now with VIX index is starting to elevate. It's now 31.48, and there's a little bit of a market sell-off. The S&P 500 is trading at 5,256, and the S&P 500 is down just under 20 points right now. So it has it was doing a little bit of a price positive move earlier in the session, but now it's negative. All right, now let's go to Bloomberg here. We're talking about the Philadelphia Fed.
And it's something that people really believe is necessary for an economy to function well. So people are nervous.
Right. All right, Katerina, thank you so much. We appreciate that. Katerina Saraiva. She's a Federal Reserve reporter for Bloomberg News. The Philly Fed naming a new president, and we wanted to bring that reporting to you. Right now, let's get a little bit of a reset right here. We'll go to Lisa Mateo and get a Bloomberg Business Flash.
You got it. We got stocks turning lower in this holiday shortened trading week. The U.S. bond market closing at 2 p.m. Wall Street time today. That's ahead of Good Friday. Right now, the Nasdaq down 0.6%, 111 points. The Dow down more than 1.5%, 689 points.
All right. So basically, what this sell-off is just people taking risk off, for the long weekend. This is nothing big unless Trump throws a cherry bomb into the news. Who knows? You can always do that, but yeah, I wouldn't sweat this. This is, but I don't like seeing the VIX, elevating in the. Now it's at 32. I'd like to see it below 30 right now. It's there's too much risk in the system.
10% right now. They were up a higher earlier. It forecast sales. The second quarter topped estimates. The company also kept its growth outlook for 2025 on expectations of AI revenue doubling. They will stick with chips just days after the U.S. barred NVIDIA from selling those H20 AI chips to China. Well, its CEO, he took a visit to the nation. Jensen Huang, he talked with the vice premier, also met with DeepSeek's founder in Beijing. If we take a look at NVIDIA's shares right now, they're down about 3.5%. And finally, Alcoa, that is the largest U.S. aluminum producer. It said that President Trump's 25% tariff on metal imports has cost the company $20 million since the duties went into effect. Alcoa is down now about 6%. For on-demand news 24 hours a day, you can subscribe to Bloomberg News now. Wherever you get your podcast, I'm Lisa Mateo. That is your Bloomberg Business Flash. Follow them.
All right, Lisa Mateo, thank you so much. We appreciate
that.
If
the market continues to sell off, we're going to see a break of 142 on the yen. It's going to break below. It's right now trading at 142.12. Last night it was trading at 141, so we may actually see we're definitely seeing an appreciation of the yen. That's in the Japanese yen. That's definitely happening here.
It's having an impact on the capital markets, and we heard that from some of the big banks that reported earnings. They had a very, very strong first quarter in terms of capital markets, but second quarter's been a little bit sticky there. Another headline coming across the Bloomberg terminal: Google partially loses U.S. advertising tech antitrust case. So that could be really material for Google. We will get further reporting on that as well. And let's just go right to a great source there. Gene Munster joins us here, managing partner and co-founder of Loop Ventures. Gene, there's a million things we can talk about here. I'm going to put you on the spot a little bit. If you want to pass, that's fine. But again, the Bloomberg headline crossing the terminal: Google partially loses U.S. advertising tech antitrust case. Any thoughts on that?
I think that they've lost cases in the past, and I don't know the context of what the scope of this is, but in general, when you see these losses, you see them being appealed, and I think that it probably would have a little impact on their business. I think that's just a general thread between the whole piece around the regulation, the antitrust, is that the bark is ultimately less than the bite. And so I think that from Google's perspective, antitrust is the least of the company's worries. I covered the company as an analyst for 10 years and was very supportive of it. When we started Deepwater, I was supporting the investment. We continue to hold it in our public fund. And we recently sold the stock, and it wasn't because of antitrust, it was because the search results page is still cluttered with AI overviews, sponsor lists, then they're organic. You basically have this kind of 7th grade science project going awry when you look at the search results page. Very different than the generative results that I think still a smaller group, call it 300 million active daily people using generative search, generative bots to do search. So there needs to be this overhaul in terms of how Google monetizes. I don't think this is going to hit the business in the next 1 or 2 quarters, but I think that what the substance of this is that there's a major transition that Google needs to go through in terms of how they monetize, and I don't think it's fully priced in share. So, Paul, my response is I think the antitrust is largely nothing, but I think there still is this very big question about how, as consumer behavior becomes more in tune to a more streamlined search experience, how Google's going to continue to monetize in an effective way.
And Google, just for the news out today, stock is off 2% today, but again, we've got a sell-off in the market, including the NASDAQ off about 0.4. So, all right, Gene, let's kind of think back. I mean, I'm just in the last week, we've had some of these chip companies kind of step up. I mean, NVIDIA sees a $5.5 billion hit from new Trump-China curbs on the chips. AMD sees $800 million charge from export curbs. Can you frame out kind of how you think about some of this tariff narrative as it relates to some of these companies that are really trying to fuel this AI, I guess, revolution, we would call it, in tech spending? How do you frame that tariff overlay onto the overall AI and tech story?
So the tariff piece, we have considered this starting, got the pace of it quickened early in April. We have to look back at what have we heard from the most influential companies, the companies that really have a pulse of what's going on in terms of the AI investment. What have they said since the tariffs have come out? And by my measure, there's been 5 positive data points and 1 neutral data point. And I'll start with the neutral data point, which is ASML this week. They missed their bookings number by like 15%. They guided June revenue down by 5%. They said that their AI part of their business continues to be healthy, but their other part of the business, ASML, makes machines that help make chips, not just AI chips, but any sort of compute chip. And that side of the business, they said, is being impacted by tariffs. And so that neutral data point, the reason why I put it as neutral is that if you really dig into what ASML is saying, they're saying that their AI business continues to be healthy. Similar comments from TSM last night, where they reiterated their guidance for calendar 25. They talked about AI. I know in the setup segment, you highlighted this, but the AI part of their business up 100% year over year. The street's looking for 55% growth from NVIDIA. And so that, to me, is a resounding endorsement that the AI investment phase is intact. And just to kind of round it out, On the positive side, we heard from, of course, Google, Microsoft, and Amazon a couple weeks ago saying that they're going to stand by their CapEx expectations despite what's going on with tariffs. We've heard from OpenAI more recently about how their user growth has quickened. At a recent 2025 talk, Sam Altman last week highlighted this exponential growth they're having in users. And Shopify is talking about any job that they have is something that they're going to need AI support for. So, Paul, put it all together, there's basically the tale of two cities here. You have on one side, the market is in a funk and wants to believe that these tariffs are going to dramatically or measurably slow what's going on in AI. On the flip side, from the company's perspective, things seem to be intact.
Mm-hmm. So, Gene, how do you then kind of model out how much these tariffs and export curbs would actually impact companies like NVIDIA, like TSMC? I mean, an AI-related business doubling this year up to 100% just seems like such a large forecast, and it doesn't seem to factor in potential roadblocks.
So the way you model it out is you have an expectation of how this ultimately plays out. And from our perspective, we look at what some of the hyperscalers are saying. We also look at what some of the large enterprises are saying around AI, what their expected budgets are, and then we trim those back. So in the case of TSM, talking about that 100%, NVIDIA is not going to grow their AI business by 100%, but by trimming it back, that 55% number to me still feels conservative. So there is a guess related to how you model this out, but that's ultimately kind of what investing comes down to, is making a prediction in terms of what ultimately these growth rates are going to be. From our perspective, we think that the growth rates will remain higher than where the street is at today. So I would say that's kind of a starting point in terms of modeling out some of the specifics. Just to put a finer point on your question on the trade restrictions, that's a little bit easier because we know which part of AMD and NVIDIA's business is going to be negatively impacted. It's about 3% with NVIDIA's business, and about I think it's 8% for AMD, or 11% for AMD.
Hey, Gene, we got about 30 seconds left, but this is maybe a little unfair. Is there a tech kind of cold war between China and the West, and if so, how do you think about that?
Oh, it is a raging cold war right now, and NVIDIA is at the center of it. And I think that's why you see Jensen moving over there now. And I think that both of these countries understand that AI I don't know from like a military perspective what analogy, probably a nuclear bomb. I mean, that's the strength that AI is going to have. They understand that, and that's why they're fighting so hard to maintain leadership.
Gene, thank you so much for your time. Always appreciate it. Gene Munster, managing partner and co-founder at Loop Ventures. The reason we'd like to speak to Gene is he has such perspective on the global technology. He's been there covering this technology industry for the last 30 years. So there at the birth and development of the internet, now in AI, and getting his perspective is very helpful to getting kind of handle what's going on out there in the news flow. The S&P 500 is absolutely unched on the day. The Dow's off 600 points. Thank you, United Healthcare. And NASDAQ off 49 points. That's 0.3%. 10-year Treasury yields 4.29%. Pretty steady here this morning. We'll have more coming up.
All right. Please go to my store, the-studio-reykjavik.com. Get the multivitamin. This is very important as cofactors for enzymatic activity, so your cells are performing the right way. You should be taking a multivitamin every day as a base. Same thing with the probiotics. A great stack would be taking the multivitamin and the probiotics together. You can see the actual ingredients for this multivitamin on the screen here. If you want, you can take a look at the label on my website, the-studio-reykjavik.com. Get this multivitamin, take it every day. It's easy to digest. Again, it's very important to take a multivitamin every day as part of that foundation, and you build off of that foundation. Now, let's talk about vitamin C. Vitamin C is very important to take for your immune system, for your skin, but also this has magnesium in it. Magnesium is very important for your brain health, and magnesium helps to boost up the efficacy of vitamin D3. So please take this vitamin C plus magnesium every day, boost up your brain health, boost up your skin health, and your immune system. Drink it with filtered water because it's water soluble. Please go to my store, the-studio-reykjavik.com. If you spend $150 or more on any order, you get a free gift until supplies last. Use discount 5 and you get $5 off. Now let's, I want to see if I can. Yeah, let's go to live now with this bunker buster bombs that the United States is using against the Houthis.
All right, welcome back. I'm Austin. Happened this weekend. It's going to happen in Rome after earlier confusion over where the negotiations would be held. The stakes of the negotiations are huge. President Trump has repeatedly threatened airstrikes targeting Iran's nuclear program if a deal is not reached. Host of the Strat podcast, Hal Kemper, is here. Hal, as always, it's good to see you. My big question here has to do with nuclear programs globally. Who possesses the world's nuclear weapons right now? And how would a nuclear Iran change the world's nuclear calculus, if you will?
Well, a nuclear Iran, obviously, as you pointed out, I mean, that's why the negotiation's there. You know, first off, they're a very unstable government. We weren't thrilled with North Korea getting nuclear weapons, and that goes back. Oh man, you're going back decades. But there was a nuclear physicist, if you will, out of Pakistan. You may recall that Pakistan, which has nuclear weapons, had a physicist, and he was kind of proliferating the knowledge of how to build nuclear weapons to the, in his mind, the Muslim world. All right. Somehow the Muslim world encompassed North Korea in his mind too. We're not quite sure how that happened. But anyway, so there are a number of programs. Iraq under Saddam Hussein had a program. Libya at one time under Gaddafi had a program. There were a number of programs. Those got shut down, and some, you know, if you want to talk about Iraq the old-fashioned way. But Pakistan has a nuclear arsenal. India has a nuclear arsenal. They almost went to blows more than once. One time I was in the Middle East, and directly, let's just say it was something I was closely monitoring in about 2002, that there was a lot of tension and there was discussion of nukes. That would have been a horrific thing. You know, obviously Russia has nuclear weapons, China has nuclear weapons, North Korea has nuclear weapons, France, Britain, the US have nuclear weapons. I'm trying to see if I'm forgetting. Oh, Israel. I think I mentioned India, but if I didn't, you're absolutely correct. And Israel doesn't officially admit they have nuclear weapons, but everybody knows they have nuclear weapons. And those are the countries around the world that have nuclear weapons. But the fear is that Iran, Iran has a nuclear program. They've been enriching materials up to 60%. If they get to 90%, that's the threshold for uranium enrichment, whereupon they can make a nuclear weapon. As of today, the International Atomic Energy Agency under the UN said that they're only weeks away from achieving that if they ever so desired. So that is something that they have on the threshold that they could do, hence the importance of these negotiations. But the fear is that if Iran was to do that, then there'd be other countries like Saudi Arabia that they would also want to have a nuclear weapons program. And even on the Korean Peninsula, and with all the changes going on geopolitically with U.S. position with various allies around the world, there's been a lot of discussion that both South Korea and potentially Japan, the only country that's ever been attacked with a nuclear weapon, that they might also look at developing nuclear weapons as well. And frankly, the technology genie is kind of out of the bottle for some time. There's a number of very advanced countries that if they really put their mind to it, could probably develop some sort of nuclear weapon.
So what does Iran have to gain from these negotiations? We obviously know that these negotiations are aimed at ramping down Iran's nuclear program. That's what the U.S. has to gain from it.
But what from Iran's side of things do they have to gain from it? What do they need right now?
Well, the primary, Austin, it's kind of a carrot and stick. Let me give you the stick, all right? That if they don't come to some sort of negotiations, and President Trump has made this very clear, they'll be hell to pay, and that hell to pay will be probably some major strike missions that essentially wipe out their entire nuclear program through kinetic means. That's one of the reasons that the B-2 bombers are forward deployed at David Garcia in the Indian Ocean, just south of Iran, just south of Yemen, where the Houthis are, in fact, being employed against the Houthis in Yemen. But they're there. They carry a phenomenal bunker buster weapon, what's called a CBU-57. It's a 30,000-pound, 15-ton. It's called a massive ordnance penetrator, or MOP or MOP. And this thing is designed to basically go into the ground and create such a tremendous explosive concussive effect that any deeply buried bunkers, facilities, whatever, will basically collapse upon themselves and be destroyed. It's a unique weapon. No other country in the world has an aircraft like the B-2 that can deliver something like this. So we're somewhat unique in that regard, and we have them out there and they're stealth. So that's a tremendous capability. So basically, to go back to your original question, the stick is that if they don't come to some sort of agreement, it will destroy them. Now, Ayatollah Khomeini was basically agreed to this, and the reports were that he was basically confronted by his senior leadership in Iran. They said, look, you're going to have a two-front war. And it's not Israel and the U.S. being the two fronts. Israel and the U.S. is one front, and the other front was the Iranian people. This is a deeply unpopular regime. Somewhere between 85 to 90% of the Iranian people want them out of there. They've had multiple mass protests. And the feeling is that if Israel and the U.S. was to do these massive strikes to debilitate what's kind of the center of gravity, or you will, one of the few things remaining that the regime has, that might be a tipping point. And you could see something in Iran like you saw, say, in Libya with Gaddafi, or some other Middle Eastern countries I could point to. And so that is a deep fear that they have, is that if they don't come to some sort of agreement, things could get kinetic. And the last part is their economy is absolutely flatlined. It is declining. The economic situation in Iran is horrible. They would like sanctions relief. So there's the carrot, is the possibility of the economy continuing forward.
You and I were talking off air. An article from the New York Times came out within the past couple hours. They say the White House waved off a planned Israeli military operation to hit Iran's nuclear program. How this is news to us. So there was actually a plan in place from the Israeli side, but it seems the White House had other intentions. Does it seem like the White House wants to go the negotiating route?
You know, it does, and it's interesting. I think the Israelis have always had a plan to attack their nuclear facilities, and if you look at their previous attack, where they actually responded to an Iranian attack, they went in there and they took out a phenomenal amount of their air defense capabilities, the sort of air defense capabilities they would need to stop an air attack, air strikes against those nuclear facilities. They even hit a target set that was associated with their nuclear capabilities. So the Israelis definitely had a plan, but it sounds like it was being pushed really forward. And that would kind of explain, there was a lot of discussion out there, which was, why was Netanyahu in such a hurry? He actually leaving a meeting in Europe, in Hungary, to fly directly to the U.S. What was the timing on that? Because at the end of that meeting, it didn't look like he really got anything that he wanted per se. You know, it was an interesting meeting. In fact, at some point during the meeting, it looked like there were some things that President Trump was saying that probably made Bibi Netanyahu a little uncomfortable with what was being expressed. But what was the imperative? And now with this report, it indicates that he wanted to go forward and do the strikes. Obviously, President Trump and his cadre were reticent to get involved in a major war against Iran. You know, those things, it's easy to get into wars. It's tougher to get out of them. And I think they're kind of worried of what that could uncork. So they said, look, let's try the negotiating route. And of course, if the U.S. says that, I think we have enough sway to dissuade the Israelis. And the Israelis, by the way, do not have B-2 bombers. They do not have the ability to deliver something like a CBU-57. So that's something they would have to rely upon us to actually to deliver in a major strike package against the Iranians.
One more thing on these nuclear talks
before we continue on with potential strike on Iran. Please go to my store, the-studio-reykjavik.com, and get the ashwagandha root. This helps to control your blood glucose levels and your cortisol levels. That's going to help with your cardiovascular health and boost up your immune system. Turmeric is an antioxidant. It's going to soak up free radicals. It also brings down inflammation. Very important for your immune system and very important for your cardiovascular health. Stack these together, you get the max benefits for your immune system and your cardiovascular health. And you can stack it also with olive leaf extract. This helps with the immune system and cardiovascular health. It helps to bring down LDL levels and increase your HDL levels, so less plaque buildup, and it brings down inflammation at the vascular level and systemically. So please go to my store, the-studio-reykjavik.com. Take the olive leaf extract every day. Stacks really well with turmeric, ashwagandha. If you purchase this combo, you're getting dual benefit. You're helping your immune system and your cardiovascular system at the same time. And that's the beauty of the way I tell you how to stack these things, so you get the max benefit from them. Use discount 5 and you get $5 off. If you spend $150 or more on my store, the-studio-reykjavik.com, you get a free gift until supplies last.
This quarterly update, the big thing though, is this stands kind of opposite of what we.
Let's go back to live now here.
Move on. As mentioned, President Trump has threatened strikes against Iran if the deal isn't agreed to. If, Hal, and this is a big if that were to happen, what avenues does Tehran have in order to retaliate against the U.S.? We've seen them try to retaliate against Israel directly in recent memory, but what about a nation much further away?
Austin, that is a great question, and I'm glad you asked that. That's the issue of how can they respond? And what we've seen is they have launched these ballistic missile and drone waves against Israel without really any success to speak of, all right? The other thing is, with the way that their missiles were arrayed around Iran, that in some ways they kind of expended, at least at that time, they sort of expended their capability to do that mission. The second wave of missiles was really non-productive for them. And there was discussion of, well, they have a lot more. Yeah, but they're not all in the right place. And the issue they had that comes out of this is, what if Israel and the U.S. were to do a major strike? What would they hit? Well, obviously the nuclear facilities would be top of the list, taking out those things, a lot of which are deep underground, hence my reference to the MOP, that big 15-ton penetrator bomb, all right? But the other thing is they're going to look at all their delivery means. They don't have much in the way of aircraft. They're still flying those old F-14s from the 70s that they can barely keep in the air, and they just don't have any air capability. They have a very limited naval capability. What they have are these missiles and drones, and obviously those would be very high on the target list as well. And if those are taken out or seriously debilitated, that goes to that second front of the war, which is the Iranian people looking at the regime and saying, that's it. We've got nothing left. We have no missiles. We have no drones. We never had an air force. The fear they have is that at some point the people will look at the regime and say, there's really not much there that's going to keep us from taking over. And there's also been a big question for a number of years, which is there's two different militaries. There's the Revolutionary Guard Corps and there's a regular military. And whereas the senior officers in the regular military are loyal, are in part picked on their loyalty to the regime, the rank and file may not be quite as, ingrained in that radical ideology as the Revolutionary Guard Corps. In fact, they're not. They're just regular Iranian citizens who are in the military. And the thought was, at some point, you may see what we've seen in other situations where the members of the military, maybe not the most senior officers, but the members of the military say, hey, we're siding with the people, we're not going to side with the regime. And that would be enough to tip the balance. So there's a lot of what ifs that go into this, and that's part of the calculus behind this whole thing.
So we got to talk about the Houthis. The Houthis.
Our global power bank of 5 gigawatts includes completed facilities, secured power.
The Houthis, of course, are an Iranian proxy. Fox News said the U.S. is now hitting the Houthis with so-called bunker buster bombs. This is, closely related to, if not the exact same thing you were already talking about. I believe a similar type of weapon was used in the killing of Hezbollah's Hassan Nasrallah. Hal, the U.S. has been striking the Houthis in Yemen for several weeks now. Are we able to tell if this has actually slowed the Houthis' attacks in the Red Sea?
It's difficult to say. They're still firing on ships. They're still doing anti-ship attacks with drones and missiles. And I've seen some numbers that indicate that it's not really having the effect that we hoped. With that said, they're going after different targets now. It's not, there was a kind of almost a strange thing during the Biden administration where if they were getting ready to launch an anti-ship missile, then we would attack. All right, which to me seemed rather strange. It almost harkened back to some of the weird rules of engagement with the Johnson era in Southeast Asia during the Vietnam War. Anyway, with that said, the gloves are off. We're going after whatever Houthi target presents itself, whether or not it's getting ready to launch, and that includes leadership targets, where they live, going after them, trying to destroy the command and control within the country, trying to shift popular support for what the Houthi leadership is doing. And then if we can find any missiles, any drones, any capability they have to take out ships, that we put it on the target set and we go after it. And that's where those bunker busters really come in. The ones they referenced, and it was interesting, some of the international news references to that were referencing the CBU, not with the exact correct data, but they were referencing the CBU 57s, although there are variations of that particular ordinance. So it could have been they were talking about that. But we've used this, we've actually done B-2 strikes in the Houthi areas before, going back some months, but not for Diego Garcia, which gives a turnaround, what we call sortie rate, that's vastly bigger than trying to launch B-2s all the way for the United States and going over there and hit them, which means it's not just the bombs themselves, it's our ability to deliver those types of bombs over and over again and cause and really get into their, observation, orientation, decision, action loop, their decision-making process, which hopefully will persuade them that this anti-shipping campaign is a really bad idea.
Okay, we need to take a quick commercial break. We want to talk about the U.S. border, though, when we return. I know this is something you have expertise in. The headline that came out today, U.S. Army to control federal land along the U.S.-Mexico border. The implications of that, how Kemp are going to be sticking around, we discuss in 2 minutes.
All right, let's go back to Bloomberg. But before we do, please go to my store, the-studio-reykjavik.com. Get the structural nanosilver toothpaste. This has no fluoride in it. It's made from structural nanosilver. Whiten your teeth, freshen your breath, help with your gum line, reduce inflammation. This is the best toothpaste that you can get. Please go to my store, get a few tubes of this toothpaste for your household. Use discount 5 and you get $5 off. If you spend $150 or more on any order, you get a free gift until supplies last. Please go to my store, the-studio-reykjavik.com. And also get the structural nanosilver gel. This is a dual purpose product. This will help as a skincare, daily skincare. You can use it as an aftershave, but also if you're not feeling well or someone around you is not feeling well, put it on your hands, around your ears, around your eyes, around your nose, around your mouth, lightly coat your nostrils, stays active for 5.5 hours. If you have a cut, an abrasion, minor burn, put it on that lesion and it'll help to heal it quicker. Please go to my store, the-studio-reykjavik.com. Get this very high quality structural nano silver gel. It's a dual purpose product. You should have this available in your household or at work at all times. You never know when you need it. And again, you can use it as a daily skincare. Please go to my store, the-studio-reykjavik.com. Use discount 5. And again, if you spend $150 or more on any order, you can get a free gift until supplies last.
What's its own view on where the stock should trade?
I'm looking at the ANR function for United Healthcare. 27 buy ratings on the street, 1 hold rating, 1 sell. No ratings changes today, given this move in the stock. Great job, guys. Glenn Losa, Senior Equity Analyst for Bloomberg Intelligence, joining us here. Let's switch back to the markets broadly defined here. We got, again, red and green on the screen here. The S&P up 20 points, the Dow off 400, and the NASDAQ pretty much unchanged. Checking with Vince Signorello, Bloomberg macro strategist. Hey, Vince, what are you hearing in the markets? What's kind of the driver of market sentiment today? Is it still just trying to get a handle on where the president wants to go with his tariff policy?
Yeah, it is. It's a couple of things. We're seeing a bit of interesting data come out this morning. It's usually something we don't pay a great deal of attention to, which is the Philadelphia Fed business outlook. And one of the things that really stood out was the new orders number. And you'd expect there would be a continuation of a build in orders as we head into what would be the end of the 90-day pause for tariffs. And instead, we saw a pretty significant drop. In fact, we haven't seen a drop like this since basically 2020, the pandemic, or 2009. And 2 periods in U.S. economic history you really don't want to associate with. So that really shook the markets a little bit in thinking that have we hit a saturation point with business and consumers where they've already kind of pre-purchased, if you will, the items that they want to in terms of front-running tariffs. And if that's the case, it really doesn't bode well for second quarter growth. The other, as you mentioned, exactly is the tariff situation. We've got 2 approaches from 2 different economies, if you will. President Xi is on the road. He's glad-handing associates trying to set up economic tariff deals in Asia and also in Europe. Whereas Trump is kind of sitting back in the White House and saying, come to me and we'll talk about tariffs, almost as the traders say, kiss the ring, if you will. 2 completely different approaches, and you wonder how that's going to play out in the long run. You would think that President Xi's approach is going to come out more the winner in this, being more likely to sell up deals as he's going around wanting to seemingly make a bigger effort, if you will. But that still remains to be seen in how that plays out. But definitely, the big thing, I think, is what's really starting to weigh on traders' sentiment is, have we bought all of the things or most of the things that we want in the first quarter and front-run economic growth for the second quarter and perhaps beyond that? And is that going to weigh into a difficulty for the Fed to deal with in terms of growth and inflation?
How are you looking at the Treasury market right now? We have yields a little bit higher on the longer end of the curve, pretty flat on the shorter end. What do you make of these moves as of late?
It kind of makes sense if you think about it. We're seeing some steepening in the curves in the 530s. We hit earlier session price. Actually, we're kind of there now at 87 basis points. It speaks of basically where traders, I think, see the story going. They see the Fed standing pat, and so near-term rates really don't have anything to drive them, if you will. But they're also hearing what they heard from Powell yesterday about potentially inflation for longer, even stickier, and maybe even higher. And so that puts a little bit of pressure on the back end, and I think it makes sense to see steepeners getting involved. And it suggests as we go forward, that's going to be the conundrum for the Fed. If we see slower growth, that what Powell said yesterday, he saw difficulty with the dual mandate. That's kind of a little scary when you take it into like its real context, right? You're seeing potentially the Fed saying, possibly the job market's going to slow, possibly the economy's going to slow,
and possibly your inflation is going to remain stickier for longer, which basically means the Fed can't do anything. They can't cut to stimulate growth because then they might fuel inflation. So puts them in a box.
What'd you make, I got 30 seconds, Vince, what'd you make of President Trump's commentary about Fed Chairman Powell and his time in office?
You know, he's angry with him for sure. He compared it this morning to the ECB cutting and how come Powell's not cutting, they're behind the curve, et cetera, et cetera. But apparently what I'm hearing from the White House sources is that Besson is in his ear and basically saying, fire him and you'll create extraordinary turmoil in financial markets. So while he's mad at him, he's going to be stuck with him, I think, for a while because he doesn't want to shake up Wall Street and what would inevitably happen if Powell were fired tomorrow. You know, the markets would fall apart at least in the near term.
All right, Vince, thanks so much for joining us. Vince Signorello, he's Bloomberg macro strategist for Bloomberg News, joining us via Zoom. Nobody does the Zoom thing better than Vince Signorello. That's for sure. Looking at the markets, kind of red and green on the screen here. The S&P is now up about 18 points. That's 0.3%. The Dow off 470 points. Again, a large part of that is from United Healthcare. That stock is off 22%, and that is a big component of the Dow Jones Industrials average. The NASDAQ is off 13 points. That's just about 0.1%. So kind of red and green here as we get ready for a 3-day weekend for the equity markets and the bond market as well. 10-year Treasury up a couple of basis points.
Okay. While they're going on commercial break, please go to my store, the-studio-reykjavik.com. Get the Myotrol. Myotrol helps with gene expression to maintain and build muscle. Very important to take once you hit age 40. Take it every day. Do resistance training. Help to build your muscle and maintain that muscle. It'll also help to support your mitochondrial health. So you have the ATP that you need in your cells to maintain and build that muscle. Very important. If you're an athlete, younger or older, take Myotrol and it'll help with strength gains. This stacks really well with Gladiator barley that I have on my store, the-studio-reykjavik.com. So take a look at that, stack it, do that resistance training, and get healthy. It's a great product that you should be taking every day. Clarity Factor, very important to take at any age. It gets rid of that brain fog. And what will happen is that you're going to be firing those neurons. And with better neuron firing and better healthy neurons, it's going to help build those neural networks, that neuroplasticity, that positive neuroplasticity. And so you're going to have better memory. You're going to sleep better. You're going to think faster. And you're going to get rid of that fogginess that people have. Drink it with filtered water. Very important. Now, another thing that you should be doing on a daily basis is do some cardio also, and do some balancing exercises and stretching. And when you do that, you're activating your neurons, right? With that kinematics, right? You're getting better blood flow. Those are all very positive for neuroplasticity. So please go to my store, the-studio-reykjavik.com, and get the Clarity Factor. Take it every day. This is great for work. This is great for people that are in school, but also if you are retired, to help with your neuroplasticity and to help support your memory. Please go to my store, the-studio-reykjavik.com, and get the Clarity Factor. A great stack is the Myotrol and the Clarity Factor. You're helping with your musculature and you're helping with your brain health. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. If you spend $150 or more, you get a free gift until supplies last. All right, they're still on break. So let's talk about another stack really quick here. Ubiquinol, it's an antioxidant. It's going to soak up free radicals. Ubiquinol is the most active bioavailable form of CoQ10 that you can purchase. So get the Ubiquinol, soak up those free radicals, help support your mitochondrial health. It will help to boost up energy levels, and it supports neuron health. This stacks well with Clarity Factor, but it also stacks well with NAD plus and C60 and resveratrol. So take this, protect your neurons. Really important. Another great supplement that I have on my store is the NAD plus supplement. This will boost up your NAD plus levels. This will help with increasing your energy levels, help repair DNA damage, and protect your neurons. Stacks well with C60, resveratrol, ubiquinol, and clarity factor. So a great stack would be the ubiquinol and the NAD plus and the clarity factor if you want. But protect those neurons, extremely important, especially when you hit age 40. All right, and do those modalities that I said. Some cardio, some resistance training, balancing exercises, stretching exercises, all those are going to be helping with the neural health and getting that better blood flow. And with that, your overall health will improve too. So please go to my store, the-studio-reykjavik.com. A lot of people don't realize that stretching exercises activates different types of neurons. When you do resistance training, activates another different set of neurons. When you're balancing, that's helping with your cerebellum. So it's important not just to learn new things, but you also need to train your body in different modalities and get that better blood flow and take the proper supplementation. So get the ubiquinol, get the NAD+, get the clarity factor. Please go to my store, the-studio-reykjavik.com.
4 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We return you now to Bloomberg Intelligence with Paul Sweeney and Emily Berfeo.
All right, Amy Morris, thank you so much. We appreciate that. Emily Berfeo sitting in for Alex Steele. Alex will be back Monday. She better be. That's all I'm saying. And we're here in our Bloomberg Interactive studio. We're streaming live on that YouTube thing. So head over to youtube.com, search Bloomberg Podcast Live. That's where you'll find us. We need some perspective, folks. When you see markets kind of ripping around as they have over the last several weeks, you need to talk to somebody who's seen some cycles before, who's managed through these markets. And our next guest is certainly one of those folks. David Kuba, he's a founder, chief executive officer, and chief investment strategist. As I like to say, he's the boss at Mainstay Capital Management from lovely Troy, Michigan. Hey, David, what's the conversation you're having with your teams? I bet you there's some folks in Mainstay Capital that haven't seen some of this volatility before. What do you say to your teams? What do you say to your clients these days?
Well, when we look at the markets that we've been in this year, and it's reminiscent, starting to become even more reminiscent of 2022 in terms of certainly what's happening with stocks and just the volatility in bonds. They're faring a little better, but the volatility in bonds. And so, when we talk to clients and we talk among the team, we talk about these different levels of investments or different levels of investing. We go level one is indexing, just S&P 500 index fund. That's worked very well over the past couple of years, and it's worked well over very many years because you own large cap stocks that have done well. From there, you go to maybe a buy and hold approach of a more diversified portfolio than the S&P 500. Level two, level three, maybe add periodic rebalancing to that. Those all work fine in a bull market. In a year like this year, 2022, other years, we have what we call level four investing, and that's tactical asset allocation. That's where investors need to be right now. They need to be.
No, buy in, broad index, take advantage of the lower prices in the S&P 500 or some other broad index and hold it. You're going to benefit down the road, definitely within the 6 months, 12-month time frame. You're not going to see a better opportunity. You're going to look back. Like, think about it. Look back on when the market tanked, all right, in 2020. Don't you wish you bought in, near that bottom? Maybe not at the bottom because a lot of stuff was happening. But the thing is maybe near that bottom? Yeah. Well, it's the same issue here. It's the same issue.
When you want them to maybe be a little bit more tactical.
Yeah, so, dollar cost averaging always works well over time. And for those participating in retirement savings plans at their workplace, a 401k plan, they're getting that automatically through payroll contributions. But in terms of the rest of your portfolio, that tactical part, it's more of not as much market timing as maybe sector rotation or asset class rotation. But the key is is we need to move beyond, and this is what we advise our clients. We need to move beyond in a year like this, or in 2022, another good example, those traditional asset classes of stocks, bonds, and cash, and look abroad, which we haven't done in years to a significant degree. We have portfolios this year that have 3 times as much international exposure that they would have had this time last year. And so a portfolio starts to look very, very different in a year like this. I don't want to say a hedge fund strategy but certainly looking beyond traditional asset classes. It's key in a year like this because there's areas that are delivering positive returns, with a bond market that's about flat with a lot of volatility and a stock market that's down 10% this year.
Hey, David, does level 4 investing, the tactical investing, does that mean kind of asset allocation changes for you?
Yes, that's exactly what it means. So tactical asset allocation, there was a study done a long time ago in 1986 where they determined that about 93% of your performance comes from asset allocation, 7% from stock picking. Some may argue with that, but that study has been done a couple of times. And essentially, what we're doing is we're looking for areas of opportunity for growth and areas to protect ourselves in downside risk. And that could be among asset classes and that could be within sectors. But sometimes it's moving to commodities or liquid alternative strategies. Gold, for instance, we have an allocation to gold in our portfolios this year for obvious reasons, and we can talk about the thesis for gold, why it's done so well, and why we think it has a long runway ahead with the markets reaching peak uncertainty and ultimate fear trade. But yes, that's exactly it, Paul. It's about getting to rotating those areas that will do well in this environment and avoiding the pitfalls.
Yeah, let's talk a little bit more about gold. Is that the hedge of choice? Because I know you mentioned liquid alts, but is gold the hedge of choice right now?
It really is. Commodities more broadly have done okay, but not as well as, say, in a year like 2022. And quite frankly, we're looking for the economy slowing this year. And if we have a slowing economy, we use less commodities. Gold it stands out there by itself, even among the other metals and even precious metals. There's considerable central bank buying. There's considerable buying among private investors, even institutions. Because of that, there are a lot of reasons people have believed gold works over time, whether it's inflation, whether it's uncertainty, whether it's fear of what's happening in the stock market, whether it's a falling dollar. Guess what? We have all that right now. So the thesis for gold is very strong and will continue to be. So yes, it has become, certainly with the massive positive returns it's had over the last several months and really over the last more than a year, we've had just a considerable run and a great hedge in an otherwise, troubled market.
All right, I'm going to shift over to the Hill. They're talking about how CNN ratings have plunged, and there's a new strategy to revive CNN.
These are the classic crew trigs by Mott and Bow. By far my favorite tees. So comfortable. They hide my belly and my man boobs.
CNN's newest chief, Mark Thompson, is planning a Hail Mary of sorts to save the network. In a recent exclusive, Thompson told the Financial Times that he's launching a suite of digital subscription services as part of a wide-ranging overhaul, adding, quote, "Our entire industry is going through a revolution. The landscape is going to continue through the stresses and strains of an enormous disruption of audiences and of the media in general."
CNN did see a little boost after President Trump's second inauguration, but it has consistently fallen behind Fox News and MSNBC in the ratings. Will these changes turn CNN's ratings around? Joining us now to weigh in is media journalist Steve Krakauer. Welcome, Steve.
Hey, thanks for having me.
So what do we make of these changes? I mean, on one hand, they don't seem necessarily implausible changes in the current media environment for any organization, but CNN obviously having some, I think, identity problems generally. Where do you think things stand for them?
Yeah, I think Mark Thompson has correctly diagnosed that you need a bit of a revolution to compete in this new media environment. I'm not so sure they're there yet. I mean, there's two sides of this. The first one, which I think is kind of the business end, and then there's the editorial end. On the business side, he's absolutely right. I think that there needs to be wholesale changes in how CNN makes money. People are fewer and fewer are going and just turning on their television in a linear way and consuming content, and then of course then you get into ad rates for Nielsen ratings, et cetera, et cetera. So I think he's right. Go to the CNN website, probably expand beyond just the typical offerings of what happened or what is happening into much more exclusive, unique areas. I think that's the right idea. Now, I'd be very curious to see the execution, and a lot of that gets back to the first area of editorial, which is the talent. Who are the people that will represent this new revolution of CNN? And I have to say, I've been thinking about this as kind of what's the analogy for this? Because CNN, years ago, I think anytime you go 2021, let's just say, and they're in an identity crisis. And CNN is like a baseball team that needs a revamp, okay? And instead of, they brought in a new leader. So they had Jeff Zucker, and then they had Chris Licht, now they have Mark Thompson. And all these people, instead of saying, let's go and hire some new talent, some new players to get our team a little bit better, they've decided to take the same players and say, okay, now we're going to be a football team. No, okay, now we're going to be a soccer team. You can't do that. That is going to be a totally losing proposition here. You need new people in the building because the audience knows that you're the same team. So I think that's really what it comes down to. If you really want to revamp CNN, you need to have new talent. You can't just simply shuffle the deck chairs of the Titanic.
It goes to show how confused the business model is. Like, if you were just to ask me how CNN is doing, I would have actually said since the election, I find CNN clips more interesting. I see more of them on social media. There's some really interesting panel discussions happening during the day with now for the first time in forever, like actual conservative voices in discussion. They've had more of Kevin O'Leary. They've had more of other people that, like, it seems like it's actually improved content for me as a viewer, but it's actually not translating to success in terms of people turning on the television and watching, which is the revenue model. So there's something wrong with just that basic problem that going viral and doing well does not necessarily translate to doing well financially.
No, because I think the vibe right now, when you talk about Kevin O'Leary, my mind goes to Scott Jennings.
Scott Jennings.
Scott Jennings show over there at 10 p.m. But it's a little bit of stunt casting. It's not necessarily this embrace of ideological diversity that I think we're seeing. You put Scott Jennings on a panel with 4 people who hate him and a host who sort of hates him but enjoys sitting next to him because, in theory, she's getting some clips out of it. That's not really a recipe for changing the dynamic and building new audience, because I don't think it's not recognizing that the moment has changed yet. And we're still in the early days. We're only 80, 85 days into this Trump administration, and I do think that this Trump 2.0 really represents something different. Obviously, you've got people like RFK and Tulsi Gabbard who are more traditional upper left. And you've got people like J.D. Vance as a VP who's populist. You've got a coalition that's built, and you're not really reflecting that on CNN when you've got just Scott Jennings and the same kind of panel and people yelling at him. And yes, those kind of clips go viral, but that's not a recipe for like long-term success or audience change, a real shift in what you're trying to do on the network.
Do you think in any sense is there an inherent problem that CNN faces in that if you take the big three in cable news, Fox News has a very clear conservative identity. MSNBC has a very clear liberal identity. CNN, obviously conservatives see it as liberal-leaning. CNN would certainly espouse the idea that it is more neutral. But the point is the clarity about what CNN is seems to me lesser than what Fox News is or what MSNBC is. Is that a problem for them?
For sure. And I think this has been a problem for, truthfully, ever since Donald Trump came onto the scene in 2015. We're talking about 10 years now of this being a problem, because you're absolutely right. MSNBC, if anything, has further embraced the their ideological bias, if you will, or just honesty about who they are and what they're becoming, and their positioning in this Trump administration. Their new boss, they're Rebecca Cottrell, who formerly was at CNN, but I think is making the sorts of hires, the new people that she's bringing in, to embrace that leftward move. And going further to the left, Fox obviously clearly up the right, and CNN is in this no man's land where I think that the problem is they are not objective and unbiased. They clearly are not. And yet they are not really resigned to necessarily be that way either. They have people on the air, like Abby Phillip, who is the host of that CNN Tonight, the Scott Jennings show that we're talking about, who clearly is coming at it from a point of view, but is refusing to admit that she's coming at it from a point of view. So I absolutely think that in this new media environment, you need authenticity. You need, I think, a real precision in how you come at issues, which I think obviously makes shows like this really successful. You need to be honest about who you are. And that's still, there's this resistance from CNN to do that because they're refusing to kind of go one way or the other. They don't have to be fully up the left. They don't have to be anti-Trump to simply be more honest about where they're coming at these issues from.
Also, the brand, just media brand.
Tomorrow. It's such a delicate word. It can be promising, comforting even. It can also be just...
Also, the brand, just media brands in general, have diminished power as younger viewers, they're getting their news from individual personalities all over social media, that kind of thing. It's not the power that the brand has just diminished, or to even replace, say, we're still CNN, so now we'll get a new person, we'll switch this person, we'll move this person here. But that's just not, that doesn't comport with how younger viewers, and by younger I mean like everyone under the age of 75, is engaging with news content. They like personality and individuals and perspective. They like to know what else is going on in that person's life. It's a mix of journalism is now a mixture of journalism and reality TV and entertainment, as are our politics.
It's totally true, and I have to say I've been watching really one of my least favorite media members, Jim Acosta, kill it on Substack. I have to say, and I'm not personally a fan of what he does, but he's doing it in a smart way because he's building a giant audience. I think he's upwards close to 300,000 subscribers on Substack, 5 figures of paid subscribers. So he's making, now upwards of 7 figures, over $1 million a year right now, based on just my numbers of the math here. I think that he's doing a good job in essentially saying I was too hot for CNN. They couldn't handle me. He was offered a midnight show. He decided to leave and start his own thing. And that is where this direction that we're seeing just across the media landscape. We're right. People are looking for personalities. They're looking for that deeper connection, whether it's podcast, Substack. That's the new media environment. Now, if I'm giving just a little bit of unsolicited advice to CNN, what I would say is embrace that. Think of yourself not necessarily as a network where you put on the CNN jersey, but almost like a record label. Collect people that are smart and interesting and have diverse points of view and put them under the umbrella and let them have their new media space, let them have their build their audience independently, but have them collect under an umbrella of CNN, a place where you can find all sorts of opinions and ideas. I would do that. I don't know where they're going to go, but that's I think what you need to do to succeed in this traditional media environment as a legacy media outlet. You've got to think bigger picture about where things are overall.
Steve, thank you so much for joining us. We really appreciate it.
Great to be here. Thanks.
Coming up next, President Trump is waging war against his enemies.
Of course he is. Please go to my store, the-studio-reykjavik.com, and get the vitamin D3. This is a gene expression cofactor, really important to take. It also helps to absorb calcium. It works better when you take magnesium in your supplementation. You can get that on my store, the supplementation for magnesium. But vitamin D3 couples really well with K2 and K7. It helps with your vascular system and also your bone health. Do some resistance training, take in some calcium, and take the D3, the K2, make sure you have magnesium in your supplementation, and you'll be building a better bone density, especially with those resistance training, weightlifting, and then also these vibration exercises that I've talked about, where you do these calf lifts and you bring down your heel. You shouldn't have any shoes on, and you'll feel a vibration up through your leg and into your spine. Really important to have that additional stimulation for bone matrix depositing. That's really important. So please go to my store, get the D3 and the K2. It helps with cardiovascular health too, and bone health. Nattokinase stacks really well, especially for the cardiovascular stack, but nattokinase is great for breaking up clots because it's fibrinolytic, and it brings down LDL levels and helps to increase your HDL levels. So take this stack, D3, K2, nattokinase, do the resistance training, and you get two benefits from it. You're helping with your bone health, you're increasing your bone density, but you're also helping with your cardiovascular health. So please go to my store, the-studio-reykjavik.com.
Antitrust case. So a federal judge found Google guilty of illegally monopolizing online advertising technology markets for advertising exchanges and tools used by websites to sell ad space. To figure out what all that means, we've got some smart people who do this. We have people at Bloomberg Intelligence that just look at litigation and what it means for certain companies, because that can move stocks in a big, big way. We've got a couple of voices here. The one you know, Jennifer Reed, a Bloomberg Intelligence senior litigation analyst. We've talked to her for a long time. She helps us out on a lot of these big cases. Now we've got another voice as well on Bloomberg Intelligence, Justin Teresi, Bloomberg Intelligence antitrust litigation and policy analyst. He's down there in DC right now. Jen, talk to us about Google here. What did the court find here?
Yeah, this is a really complicated case, honestly, Paul. Google has these products, which you referred to. It's called the ad tech stack, and it's not something normal consumers know about, but it's a series of software from start to finish whereby publishers and advertisers can come together to sell and buy space on the internet, right? And it's important because it's moving very quickly and lining up the ads properly, with the consumers that should see those ads. Google actually has, through a series of acquisitions and some of its own products, control over that entire stack. It has competitors for certain pieces, but it's one of the only ones that has all the pieces. And so the allegation here was that Google was manipulating its control over some very desirable pieces of the stack to force publishers and advertisers to use all of its products, taking fees all along the way and basically naming its price because it had these must-have products. So what this judge found was that for some of those products, one on the publisher side, the publisher ad server, and then the ad exchange that sits right in the middle and does the auction between the advertiser and the publisher, that Google was monopolizing both of those products and also illegally tying them together, meaning, hey, publishers and advertisers, if you want to use our ad exchange where we have these really desirable advertisers, you have to use our publisher ad server, and therefore we keep our 90% or so market share.
All right, Justin, let's bring you in here to just get your take on the context of Google, because this isn't the first time that there's been an antitrust case against Google. What did you make of this decision?
Yeah, absolutely. And I think Jen really hit the nail on the head here. This is obviously compounding the search ruling that came out last year. We're heading to a remedy phase on that case this coming Monday. But to Jen's point, really, this aspect of the ruling, focusing on the publisher ad server and that exchange that Jen said sits in the middle, that is the crux of the case here. The government's going to likely ask now for divestitures of that publisher ad server and the ad exchange in the middle. But I really do question whether or not the court is in a position to order that. I think a lot of testimony at the trial, which I attended, really points to the fact that publishers feel reliant on the ad server because the ad exchange in the middle then gives them the real-time advertising they want from Google Ads. So if you fit that cord in the middle, perhaps you get a remedy that's desirable without actually forcing a divestiture out of either of those properties.
Justin, I wonder, at the trial, who do they get up on the stand and say, I don't like Google? Doesn't everybody is anybody really complaining about Google and its advertising service?
Yeah, Paul, I think really who's complaining is the publishers who are selling that space on their website through the publisher ad server, right? I think their complaint is largely they don't really have a lot of control over the kind of ads that end up on their website. They don't have control over the pricing involved with all of that. They don't really like the fees that are involved. And if they want to use a different ad exchange in the middle, perhaps, and find a lower rate, that they're paying to get those ads furnished to their website and want to collect a higher fee, they're not able to do that if they're really relying upon the prices and the policies that Google is using to display those ads on their properties.
What is Google saying in response?
Well, Google would say, look, we have loads of competitors for these products. They sort of pick apart the policies that the Department of Justice pointed to, saying that you're forcing these companies to use your products, saying, no, based on these policies, they're not forced. They have options. They can go to our competitors. And by the way, there's this doctrine in antitrust, and it's called a refusal to deal. And essentially, it's a big defense that's used by a lot of these companies. Essentially, what the refusal to deal doctrine says is that any company has the right to deal with who they want to, and they don't necessarily have to do business with their competitors. So in other words, a competitor ad exchange working with Google's publisher ad server. And that can often work, but in certain cases, the conduct of the company goes beyond just sort of what's covered by a refusal to deal, and it becomes an unreasonable restraint of trade. And that's where you sort of get past that. So what Google tried to say is, well, this isn't unlawful under the antitrust laws because we don't have to do business with our competitors.
Folks, here at Bloomberg, we have complete transparency amongst all employees. We know where everybody is all the time. It's called the out function. It's the calendar. I look for Justin. I'm like, where is this guy? And he's based in New York, but he's down in D.C. And I go look at his calendar, which is the out function. And it's something called the FIC versus Meta trial, another technology company. Why are you down in D.C. for this trial? What is this trial?
This is the topic of the week, I feel like, Paul, right? So the FCC is suing Meta right now, seeking a divestiture of Instagram and WhatsApp for the actual acquisitions of those companies that are arguing with anti-competitive. But as we all know, they've owned properties now for well over a decade. And I have to say, seeing Zuckerberg on the stand the last 2 days, his testimony has been really, really strong. He did a great job fending off a lot of the criticisms coming from the FCC. His case, I think we both thought, Jen and I, was already not necessarily the strongest. There's a lot of holes there. I don't think they really defined the marketplace the right way in terms of positioning Meta as a monopolist. So there's a lot going on. It's big tech on trial, I think, and everywhere you look these days.
That's right, and now it's not just Jen. We've got a bigger team of litigation analysts. Jen, as you sit back here, in your experience, are these tech companies at risk, do you think, from the courts?
Absolutely. Look, you're at risk because there are liability decisions now, 2 of them against Google, right? And in both cases, the Department of Justice is going to ask a judge to force it to sell assets. And as long as that's out there, those companies are at risk. Now, would I bet that that's what's going to happen? No. I don't think that in the search case, which has a remedy hearing starting Monday, Google will be forced to sell Chrome, and I don't actually believe in this ad tech case that they'll be forced to sell off the publisher ad server or the ad exchange. But they're at risk, of course, because you have no idea what a judge is going to do. I should say that the remedy hearings will take place, decision will be made, and at that point, Google will appeal.
All right, Jen, fantastic. I tell you, folks, Bloomberg Intelligence, it's not just stocks, bonds. We've got litigation antitrust research at BIGO. This stuff moves stocks. If you're a technology investor, you have to have an opinion on what the antitrust risk is for some of these big tech names, whether it's Amazon, Meta, Google, and we've got experienced antitrust attorneys writing this research for our Bloomberg customers on BIGO. It is awesome stuff. Justin Tracy, Jennifer Reed, they are Bloomberg antitrust analysts for Bloomberg Intelligence. We got them, and we had them in studio today giving us some opinions on Google and Meta. You can't get it anywhere else. We'll have more coming up. This is Bloomberg Good Morning.
All right. Please go to my store, the-studio-reykjavik.com, and get the resveratrol. This is an antioxidant. It's going to soak up free radicals, so it'll help to boost up the health of the mitochondria. You're going to have more energy. It also helps with youthful gene expression and get rid of cells that are in senescence. So this is a really important supplement for an anti-aging protocol. I've been taking resveratrol for decades. So please go to my store, the-studio-reykjavik.com. It stacks really well with NAD+, ubiquinol, C60. So with resveratrol, you're going to start, especially when you stack it, you're going to start seeing that aging, that slowing down of that aging process for you. So stack this, like I said, with C60, NAD+, ubiquinol, works really well. Please go to my store, the-studio-reykjavik.com, and get that youthful gene expression. Really important. And C60, very potent antioxidant. It's going to soak up free radicals. It's going to reduce the stress in the cell, boost up the health of the mitochondria. You're going to have more energy. The cells in your tissues and your organ systems are going to perform better. You're going to have a better immune system. You're going to have a better endocrine system. It even improves the health of your neurons because it's improving the health of the mitochondria. So you have more ATP in those neurons to produce those neurotransmitters, but it's also soaking up the free radicals and reducing the stress so that the neuron is healthier. So please go to my store and get the C60. Take a teaspoon a day, take it on an empty stomach for best absorption. If you work out, take it before your workout. It'll soak up the free radicals that you're generating during your workout, and you'll recover quicker. And by taking C60 on a regular basis, you're going to start seeing the benefits, more energy, your endocrine system is to perform better, your immune system is going to perform better, you're reducing the stress in those cells, and the damage that free radicals cause, you're reducing that. So please go to my store and get the C60. You can get it in MCT coconut oil, avocado oil, or in extra virgin olive oil. C60 has to be in a lipid, in an oil, for absorption, for proper absorption. Really important. Please go to my store, the-studio-reykjavik.com. Get the C60, use discount 5, you get $5 off. You spend $150 or more on any order, you get a free gift until supplies last. I have it in a 2-ounce, a 4-ounce, or an 8-ounce configuration. It is cheaper to buy it in the higher ounce configuration because the per ounce cost is less. All right? So it behooves you to buy a 4-ounce or an 8-ounce, but it's up to you. I understand people's affordability during these tough times, but make sure you get C60. Don't skimp out. It's very important to take. It's extremely important. It's a cornerstone of this health protocol that I have. So please go to my store, get the C60.
What has happened is it's becoming more and more difficult to get that subscriber growth, right? So 2 years ago, they kind of hit this wall when they actually started losing subscribers. And at that point, they introduced like these new initiatives. So there was, a password sharing crackdown. There was this new advertising-based tier, and that actually helped them kind of really reinvigorate subscriber growth in a big way. But the reality of the story is that this is becoming a mature business, and so it's got to be kind of treated like one. And so they're moving now more to the financial portion of the business and really focusing more on growing revenue and growing profits. And so that's why we're kind of seeing this shift.
Is the Netflix model kind of recession-proof? Do I want to own Netflix, Geetha, if we think this economy is going to slow down and maybe even go into a recession? I'm sure you've been asked to kind of flex some of your models for some of your companies. How does Netflix fare?
Fares very well. I think it is one of the best positioned names in media and internet today. and that's just because of the model itself, Paul. So, it's a subscription-heavy model. There is very limited, yes, they did introduce an ad tier, but so far that is a very, very nascent business. So if you just looked at 2024, they haven't actually disclosed advertising revenue, but we estimate it was about 3% of revenue. So literally no exposure to advertising, which typically tends to be the first industry that is affected in a downturn. So they're a subscription-heavy business. And again, if you ask about whether people would cancel their subscriptions at some point, we don't really think so, because one thing that Netflix has established itself is, it has become kind of like the dominant streaming service. It's a must-have service. And again, yes, some people may say, okay, $25 or $18 a month for a standard plan or $25 for a premium plan is pricey. But if you look at the depth and the breadth of content, I mean, this is a compelling value proposition. And hey, if $25 is too much for you to pay.
You really think that people are going to keep on paying for Netflix? No. They're going to start losing subscribers, especially if they hit the $40 price point. Over time, it's going to be too expensive. Please go to my store, the-studio-reykjavik.com. Get the Gladiator Barley. This is a high-density protein that helps to build up strength, detoxify your body, soak up free radicals with superoxide dismutase, bring down inflammation. By bringing down inflammation, you're recovering quicker after your workout, you're helping with your cardiovascular system, and you're helping with your immune system. Take this every day. You get a big scooper, take a full scoop or a half a scoop each day, mix it with soft foods, filtered water, a smoothie. Some people mix it with milk, but take it every day. Really important. Do resistance training. It stacks really well with Myotrol, so you can build muscle. If you're an athlete, younger or older, you will benefit from this also by taking this as your fuel source, either pre or post-workout fuel source. Now, a lot of people, that are taking my supplements are not athletes, all right? So you'll benefit from Gladiator Barley too by just doing a little bit of working out, all right? You don't have to be an athlete, and you'll benefit and get that muscle that you need. Really important. And by the way, make sure that you work out your back muscles, all right? Really important for good posture. It'll help align your spine better. And when you have a better posture, you're going to actually improve your lymphatic flow, and you're also going to improve your blood flow. So just a little trick to improve your health. So please go to my store, the-studio-reykjavik.com, get the Gladiator Barley. I also have the Heirloom Barley. Very similar to the Gladiator Barley. You take it the same way, except that with the Gladiator Barley, it's giving you also the benefits of that strength that you need, while the Heirloom Barley doesn't do that. It just focuses on the detox, bringing down inflammation, and soaking up free radicals with superoxide dismutase. Both are very high quality. You can take them separately, or you can mix it with the Boomer Boost, all right? I suggest that you mix it with the Boomer Boost because you get the max benefit, all right? So those are the Heirloom Barley, and the Gladiator Barley is the high-density protein that you need that helps other systems like detox for your body. But Boomer Boost is 68 nutrients that you need to take every day. You take it for your breakfast or for your lunch, so once a day. You can take it separately, or you can take it with the barley. It's best that you take it with the barley. And you get a big scooper, take 1 scoop a day, mix it with soft foods, filtered water, milk, or smoothie, however you want to take it, but take it once a day, breakfast or lunch. What you're going to notice is that you're going to have lots of energy. You're going to have this steady burn of energy throughout the day, no spiking. You're going to have better concentration, better memory, better sleep. It targets also your heart health and your vascular health. It targets your brain function. It targets strength, so you're going to have more strength. And it's going to boost up your energy levels and your metabolism. Within 72 hours, you're going to notice the benefits of this. It has 68 nutrients. So take a look at the label here. Read it on my website, the-studio-reykjavik.com. It's a great supplement to take every day. You will notice the benefits of it within 72 hours. All right? You're going to be sleeping better and have more energy and more vitality, and you're going to be wanting to do things, all right? And you're going to just naturally move around more and want to work out, all right? So take this. You can take it separately, or you can take it with the barley, either the heirloom barley or the gladiator barley. Now, if you're an athlete, take the Boomer Boost pre-workout or post-workout with the gladiator barley, all right? If you want to stack it with also the Myotrol, you get the max benefits. Now, for ones that are not athletes, again, you're going to benefit from taking the Boomer Boost separately, but if you start working out and you're taking the gladiator barley, you're going to really bring down those A1C levels. You're going to control diabetes, all right? You can control your blood glucose levels. You're going to get healthier. You're going to have better heart function. You're going to have better brain function, right? You're going to have lots of energy, right? And like I said, you were and detoxify your body and bring down inflammation. Those are really important for vascular health and immune system. So this stack is really powerful, especially when you when you approach a holistic approach. All right, and that holistic approach.
I hear you let them go.
That holistic approach is proper diet, proper exercise. Make sure you filter your water. Make sure you stay away from processed foods. Do the four modalities of working out: resistance training, cardio, balancing, and stretching. That all four are really important. Do that regularly. Proper sleep, and learn new things. All right, pick a subject that you want to learn, something that you're not used to learning. All right, read, write, talk to people. These things are going to be very positive for your brain function and building neural connections. And when you're eating better and you're eating properly and you're staying away from processed foods and you're detoxifying your body, and with proper supplementation, you're this holistic approach, you're going to get the max benefits from stacking these supplements. All right, it's a lifestyle. It's the point I'm making is it's a lifestyle change. Many chronic diseases, not all, but many chronic diseases in the United States are self-induced. So you got to take charge of your health. Now, I have lots of very high quality supplements that if you stack them a certain way, which I do, then you are going to get the max benefits. You're going to slow down the aging process, boost up your immune system, improve your cardiovascular system, and you're just going to have more vitality into your geriatric years. And chances are if you do this over a period of time, you're going to get that compound benefits and you're actually extending your life. But not just extending your life, you are improving your vitality, which is more important. So please go to my store, the-studio-reykjavik.com. These are things that I do to improve my health, all right? And if you follow my lead on this, you will improve your health, all right? I'm in my 50s. I don't look like I'm 50. There's a reason. It's that holistic approach with the proper supplementation and the way you stack it. Right? I've been doing this for a long time. Like I've been, with taking larger amounts of vitamins and antioxidants at about age 16, all right? And tweaking it over time in my 20s. And when I was doing triathlons and then new types of supplements came on the market, in my 30s and 40s. And then, just a lot has happened in the last 15 years in supplementation and how to use it, anti-aging, longevity science, preventative medicine. A lot has been learned in the last 15 years, all right, about the aging process. Learn from what I do, and you're going to benefit. I have very high quality products. Please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off. Stack them the way that I stack them. If you purchase $150 or more, you get a free gift until supplies last. I've curated these anti-aging boxes and longevity boxes at discounts compared to purchasing the individual products on the store. So there is another way to save money and to get healthy and It's built a certain way so you can target certain systems, like your cardiovascular system or your bone health or your skin, immune system, your brain, so take a look and take advantage of those anti-aging boxes and those longevity boxes. Stack these things the way I've been telling you to stack them, and do this holistic approach, and you will get healthy. Thank you for listening. That's going to be the end of my transmission today. I've been doing this for 3 hours and 15 minutes. Thank you for listening. I greatly appreciate all the individuals watching on Rumble, YouTube, on my website, and participating in X Spaces. Thank you for following me and watching the show today. Have a nice day, and maybe I'll be doing another show tonight. Have a good weekend. If I don't see you, we're going to have probably a long weekend because of the holiday, but be safe and take my advice. Take charge of your life. Take charge of your life. If you don't, no one will. Thank you for listening. Have a nice day.